Good morning. Monday, the 22nd of September, 2025. It's 8 o'clock, 0800 Central Standard Time. All of the times on my charts that I refer to are Central Standard Time. Welcome to Risk Neutral Trading. This is my virtual trading journal. I believe journaling is very important, but I don't multitask that well, and I find, even if I did, I find this a lot more effective because I am able to remain focused on the markets. Everything that I see on my screens is captured on the video, and my voice over here provides insight as to what I was thinking, so I don't need to be bothered screen snapping and typing and doing all those things that are associated with a journal. This first is, again, my trade journal, so it is not for financial advice or trade advice. The idea here is to provide a full, transparent, and fully accountable record of my trading. And when I speak here, I'm talking to myself. If I say you, I mean me, right? Because it's my journal. Just imagine that you're watching over my shoulder as a little bird or something else. And there you go. Please drop something in the chat. It's always great to get some feedback, thumbs up, whatever. This is not monetized in any way, so your thumbs up and subs or likes and subs are great. I do stream in 440p or 1440, so it's high def. If it's kind of grainy on your end in YouTube, click the icon there and select high definition. I stream this to YouTube for a couple of reasons. Number one, I can review it on any device, which is really handy, and it provides a complete transparent record of what's going on. Let me make sure that everything is happening here. Looks like so. Looks like the stream is streaming, and that's a great thing. All right. Hi, Panda. My cat is saying good morning. So let's see what I was thinking now. I lost my train of thought there. I guess that's about it. Anyway, let's get on with the numbers, of which there are basically none. This is I use two news sources. One is investing.com, which I've used for a long time, and the other is Financial Juice, both of which versions I use are free. You can pay if you want, but you don't have to. This is the reporting. I like investing.com from a point of view of screen snaps or sharing. This is today's reports. Now let's look at this week, and you'll see a big difference. There we are. This would be for Tuesday. They also have the earnings calendars. And Financial Juice is sort of the same. It's got a similar calendar function over here, but it has more of a squawk box feel on this side. Now, I try not to spend a lot of time looking at this because most of it's this guy here, this new Fed guy. He was appointed to the Fed last Monday or Tuesday, I think he was confirmed, and he has had about 5 speeches, like 2 a day ever since then. So he's obviously got an agenda, and he still is an employee of the White House. I'm real curious to see how that's going to shake out. Pre-market, that's probably the most important thing that we're doing here. Oh, by the way, back about the stream, there's a disclaimer in the description here. You should read through that. So here we are with the pre-market. This is my charting software, which is IRTinvestor.com by Lynn Soft. This is the ES Mini. This is the NQ Mini. We're in the Z contract now. We rolled over last week. Boy, last week was the week from hell, wasn't it? And this is our my version of a high time frame chart, which is a micro composite. What the way this works is the following. It is looking at a RTH session, regular trading hour session, which is 8:30 to 1600 Central Standard Time. Each one of these is a 1 day or a daily candlestick. Wherever price overlaps, I continue to draw a volume profile around it. I refer to this as the micro composite volume profile. And what that does is it automatically generates high and low volume nodes, which are represented here by the red and green lines. These levels push automatically to bookmap. And then it also generates a micro composite VPOC, which you see here is at 6670. Then if we want to, we can look at all the naked volume points of control up and down the thing here that have been there a while. Oops, wrong one. Didn't mean to do that. And this is the market profile chart. I track the same set up for the micros instead of the minis, because I push the session prices freely and share them with other people, a lot of different people. And these are the session prices which are automatically pushed from IRT to bookmap. We're about 0.29% down negative change today so far this morning on only 123,000 contracts. Really light volume. That's pretty crazy. All right, let's look at bookmap. That's the execution platform. Here we go. So, first of all, this is the bookmap dome, level 2. It's pretty obvious, isn't it? This is the micro composite column where I manually enter these values. This is the all-time high, which we put in Friday. This is the naked volume point of control from Friday, which we just saw in the other chart. These levels I put in manually. These are the high volume and low volume nodes here, which push automatically. This is the the full session volume profile. This is not the overnight. This is the full session, or the old Globex. This started plotting at 1700 last night. It will continue through 1600 today. This is the RTH session volume profile, which will reset this morning at 8:30. You can see how extended that thing was. Crazy. And here is a real important column for me. This is my notes column. The first thing I do is determine the open type for this upcoming RTH session. And then I change the title of this column to reflect that. So we're going to open lower in range this morning, likely. And how do I determine that? Well, it's really simple. If we opened right here, right now, how would that price relate to the previous close, which is right here? Previous RTH close now. It's lower, right? How does it relate to the previous range? Well, there is the previous RTH high, and here's the previous RTH low. So what is it? It's lower in range. Wow, how'd I know that? Okay, the next thing I do, and you'll see that all these statistics were entered Friday morning before the open, and just as we're going to do today, and they don't change, and so those provide real guidance. Next thing I do here is clear all the notes. That's the important part. All right, now we'll get back to the statistics in a minute here, but right now the next order of business is the IRT session prices. These are the session prices pushed automatically from IRT to bookmap. If you would, these levels could help you real time from Sunday night at 1700 through 1600 on Friday, 24 hours. Let me know in the, subscribe, like, let me know in the chat, and I share them with you. I'll hook you up. I share them with a lot of people free. I don't charge for them. So there you go. It's pushed out as a CSV file. So even if you don't use bookmap and the other thing you can use a CSV on, there you go. These are the, this is my heat map or chart, and you notice that it is, there are no indicators on my, either my book map or my IRT charting. Now, these levels, first let me say that there's nothing mysterious or magical about the levels that I use or that I push or that I observe. Each one of these is, may take you a little while to figure out my abbreviations, but, overnight high, ETH high, R close. This is the RTH close. This is settlement. This is the previous RTH high. This was value area high. This is developing value area high. The difference between value area high and developing value area high is developing is for the current auction, value area high and lower for the previous auction. A line that confuses some people sometimes are these IB high and low. They are nothing. That's because of the naming, which is an old market profile convention, initial balance. What these two levels actually represent are nothing more complicated than the high and the low of the first 1 hour of the RTH trading session every day. That's it. POC, also not complicated, simply marks the price at which the most contracts have traded so far in the session. So this more muted yellow here is the full session volume profile, and the brighter yellow down here is the RTH. I track both of those. I also track a VWAP for both the Globex and the RTH, and there's a mid for only the RTH. That's it for lines and levels, period. Now, let's get on with the statistics here. First of all, these are, you have to understand that the market is a market of probabilities. You're not going to predict it. It is random. So here you go. This study conveniently, IRT conveniently highlights the correct open type, but only after we open. So this won't be changed until 8:30 Central Standard Time, which I assume will be this one, lower in range, as we just determined. The way the study works is also very simple. It looks back at 2,000 trading days. Of these 2,000 trading days, price opened lower in range in the RTH session 588 times. Of these days where we opened lower in range, price revisited the overnight volume point of control 496 times, or 84.4%. Overnight volume point of control, 84.4. Bam. Pretty tough, huh? And that's exactly all there is to it. Now I'm just going to simply go down the list. The next order of business is the overnight mid, which is 83.2. And that's right here. And I think I probably got that offline. Yeah, I did. You can drag them, but I don't do that very well. Oh, man. There we go. The next is the previous close, 73.6. Where'd that go? That's up here, isn't it? Now, I'm going to tell you something about these statistics. They are probabilities. Remember, this is the number of times, this is the percentage of time where we opened lower in range in a data set of 2,000 days, and price revisited this overnight volume point of control, period. It's a probability. Makes sense. Suggests a pretty high probability, but it is absolutely not a hard, fast line in the sand or a target or something else. It's to guide us as we trade. Give us some ideas. Next order of business is IB high, and that's 70.4, and I'm glad that that came up because that is 70.4, and I got to do IB high here. Why do I have to put the initials? Well, remember the definition. The IB high and the IB low only flag the high and low of the first 1 hour of the RTH trading session. Stand by one. Well, that's a wrinkle I hadn't planned on. We got working guys coming over here to treat the house for termites, and they were supposed to be here around 12. And the guy that was the guy who just called. It says they're going to be here in 15 minutes. So I'll continue on, but this is going to be a disjointed hooly bob here. I'm sorry to say. Yeah, damn it. All right, back to my statistics. So the definition of the IB high is just the high or low of the first 1 hour, right? So I put the initials here because the minute we open, I won't remember what the hell 70.4% was for. I'm honest. Overnight low is 66.8%, and that's right there. Sucked, but I'm sorry. What are you going to do? I had it done on Monday, figuring this was the best day to have them come. IB low is 61.1. Obviously, the screens will stay up, and everything will be normal, but I won't be talking as much, and I'll be having to do some stuff with these guys. Part of the treatment they're going to do is in here, so I've got all my office piled a pile of crap behind where I'm standing. I have two big stand-up desks here in an L with all of my computers and monitors on them, so it's going to be kind of hectic. Let's just put it that way. Overnight high is 52.4. Where'd you go? Right there. All right, I'm going to cut to the chase here. Those are the statistics. You see how, let's see, previous low and previous high. Where did they go? Previous low is 51.4. Previous high 40.1. Notice that this previous high is the all-time high for the ES, which was put in yesterday, Friday, whatever day yesterday was. Okay, that's going to have to be good enough for now. Good morning. Throw a thumbs up or a like and drop something in the chat wherever you are. I'm going to now, so we've entered these statistics. There's a couple things you need to remember about them. Number one, the POC and the high and the mid are dynamic, right? The market is still trading, and it will do so until 8:30, so these may change. The next thing I'm going to do here is a snap called that I do every morning at sometime. I do every morning about 8:20. I do 2 snaps in an old Discord chat room that I feel has value, and I like the folks there. And that's called the Traders Lab. It is a bookmap Discord chat room. Started by a guy named Tom B., who I believe is the real deal. And so, I can't think. See why I don't multitask? Anyway, every day I make 2 posts in there. Early morning, I post the reports, which I've just gone over here. And then I make this post, which is basically just to give folks there that don't have the same kind of charting a full comprehensive view of all the levels and crap that's going on, right? There you go. And if that's helpful to you, take a screen snap there. No problem. These are several different sessions. Looking back, overnight, RTH, etc. There's the POCs, value high, blah, 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 blah. And then here's all the numbers you ever dreamed of. And here's our current setup. All right, let's take a quick look at where we are for volume and rotations, etc. Well, we're down at 3 points ATR, and we're at 103% volume for this time of day. That's kind of surprising to me. This is open interest, SPX, there you are. Okay. What are we doing now? So at the minute we open, I'll change this from full session to RTH session to keep the value area and developing value area highs and lows synced properly. We're going to open in 7 minutes. I've gone through, geez, I'm all discombobulated now. I was planning on those guys. I had thought this all through, that these guys would show up here at about around 10 or between 10 and 12 when everything was kind of quiet, and I would have this pre-market all done, and we'd have our first hour of trade underway and things like that. So now, oops, best laid plans of mice and men, right? What am I doing? Where am I? Okay. This little hiccup, I got to change. I don't know what's going on exactly with my where I am now in the course of things. I added several more hotkeys for the chapter markers, so that should save a lot of time in typing. Oh yeah, let's get back over here to bookmap. So We know what the session levels are. This is going to refresh here in a second. This has got something to do with these levels, the IRT prices, which they'll be here in 1 second again. It's got something to do with a delay on resyncing Dropbox. I don't know why, but anyway. There they are. These are automatic real-time pushed by IRT and tracked by IRT. These levels here, these price lines, use the exact same data. This is an indicator you buy from Bookmap. These are cloud note columns, which I push in from Bookmap. I like the levels because it extends the line, and they have the facility of showing more than one level title at a time. If there's 2 level titles, for example, here, they would be split by a vertical line, which brings me to vertical lines. This blue line here is nothing more than a visual cue for me. This is so I can, my workflow is to keep the entire session in view on this chart the bulk of the day, so I always have a firm understanding and perspective about context. So at the beginning of every session, I just throw this blue vertical line on, which is real simple. You just go, ooh, whoop, vertical line, smack. That's all there is to it. The thinking is that through the course of the day, I can glance left or even out of my peripheral vision. If I don't see this blue line, I know that I need to do something, that I don't have the whole session in view. Now, then, so that's how it works the bulk of the day. When I anticipate that I will be possibly interacting with the market, I'm able to then zoom in and look for target, trigger, etc. And that's the way you should trade. Nothing should be in a hurry or a surprise. You should be expecting your vetted setup to present itself and possibly present a trade entry opportunity long in advance of that happening. You anticipate it. You don't predict anything. Now I gotta make sure I've got my shit together for everything else around here for this bunch of guys showing up. The best laid plans of mice and men, eh, baby? All right, so I hope I have the pre-market under control. ahead of the onslaught of termite patrol here. There we go. We just opened. We reset about 2 seconds ahead, which is pretty freaking weird, but okay, great. So let's see what's going on here. I'm trying to, as I have explained ad nauseum to anybody who's a regular follower here, the way I switch these, damn it, the way I switch these, the charting is like this with IRT. It's real simple. You just go like that. And now they're full session. Now they're RTH session only. So here is Friday's RTH session profile, and here we have open. What are we? We're lower than the close, and we're within range. So don't you love it when a plan comes together? Now, in order to keep my plotting correct, we'll do this. I do this every morning at, come on. I need to get, I don't know how much more RAM and crap this computer needs. I build my own trading computers. 22 milliseconds lag time, it says. I don't know why. This is a 10 gig fiber optic network connection. I build my own computers. It's a it's a i9 12900K multi-core, 64 gigs of DDR5 RAM. I guess the weak spot must be this GPU, which is a 36-in NVIDIA RTX 3060. I guess. I don't know. Just goddamn tired of it. I know that much. All right. So back we are to Bookmap. We've got our charts redone. You see that we have tagged out the overnight volume point of control. We opened almost exactly on it. And now we're trading up. We've taken out the mid. That statistic's been revisited. We're just about ready to revisit the overnight IB, or the previous IB high. And I start putting in my migrating volume point of control flags, which you will soon recognize is not as important as it used to be. And I'll tell you why. I used to keep my charting at about 5 minutes, much more granular than this. And in that configuration, even though the yellow brick road continues to plot all day, just as it does over here on IRT, how will you know where it's been? Well, I would use these migrating VPOC flags to determine that. Now what I do with this newer idea of the workflow, that I put a vertical line like right here. I don't have to do that. I can keep this vertical line visible no further than the left edge of my screen, and I know exactly what the VPOC and the context has been so far for the day. So there you go. Now, typically, I'm just going around the horn here, making sure I've got everybody in business. So here we have the RTH session ES Mini, NQ Mini, Micro Composite, switch the market profile to the day session. We've already determined that we're opening with some volume here, which is still kind of surprising to me. There we go. That makes a little more sense. Now we're down at 62% volume for this hour of the day and 2.25 ATR. What does any of that mean? That means it's very light liquidity and very shallow. What I try to do with the price level here is keep it at 1 point. Here's my next migrating VPOC. Just as I said, an old habit. Now, so, keep in your mind, context is hemmed in by this vertical line, and these are 1 point increments in the price ladder or schedule, index, whatever you want to call it, meaning that there's 4 ticks within each one of these. Oh, and you know what I didn't do yet? Whoa, that was dumb. That's what happened when the phone rang. I can't trade. How stupid is that, huh? Okay. How you enable trading in Bookmap is to click this button, this padlock, which enables the trade control panel. See what going through a checklist does for you and replaying everything? So if you select the chart, what you're going to do here is select the way that you will interact with the Bookmap application to trade with your chart, with your mouse. If you choose chart, the only place you can trade with your mouse is this active data column. If you choose dome, the only place you can trade with your mouse are the dome columns, and both is, yep, you guessed it, both columns. Now what I do is I go a step further and I use multi-brackets. And herein is the risk-neutral trade management idea. This is the smallest risk-neutral trade package you can use, 2 contracts. It has to be an even number, and you'll understand why in a second. So here's the package, 2 contracts. And then you determine a stop size for the entire package. In my case, I've determined it to be 12 ticks. First thing you should use to determine this when you're working this out is what are the risk parameters on your account? What's the volatility of the market at the time when you're trading, your time frame? Anyway, that's, those kind of steps, ATR, etc. Once you've determined the package size and the number of ticks for the stop, the first risk neutral scale, or the T1 profit target, is automatic. It's for half of the package, 1 contract, and the same amount of ticks positively as the stop is negative. And then there's a runner, 48 ticks. Now, if you have more contracts, boom, 4 contracts. If you have high volatility, 4 contracts, boom. Real easy. And I will point out here that this multi brackets is smart enough to know which way you trade. If I short, it knows that the stop loss is positive 12 ticks and that the take profit is negative 12, negative 48. If I go the other way, it's smart enough to figure that out, which is real handy. The next thing I do is always tick this one, which is the multi-account trading thing. Okay, let's see. And then I'll explain that in a second. Then I confirm the package size. You see these metrics that can be available to you here in the trade control panel. They are the same as up here. And because I use multi-brackets, I don't need any of this functionality down here. So I'm able to re-click that button. It stays green and the padlock stays open because we've selected a way to trade with the mouse. I can have all the same metrics here in ticks because that's how I select it instead of dollars. I don't think you should ever trade your P&L. Cancel all, close all. And I get the real estate back from the trade control panel on my chart. Boom. There you go. Boy, that was pretty dumb. Huh? But that's why that's why you should stay calm, normal, and use a checklist. I was going through my list. Was everything ready to go? And it was not. I hadn't set up trading yet. Now, back to the multi-account thing. This stream that you're looking at right here is a TopStep evaluation account. And here are the guys. Stand by. I've got to move a few more things here in my office now. So if everything goes dark, you'll know I kicked the plug. Son of a bitch. Hey, Richard. Hey, welcome back, Richard. What's up, dude? How was your road trip? Boy, you picked a great week to go. Monday, rollover. Tuesday, PMI. Wednesday, the Fed rate meeting. Thursday, CPI. And Friday, triple witching. It was the week from hell last week for a lot of people. So I hope you had a great journey. You picked it. You picked the perfect time to take a vacation. And now I've got a whole crew of people here for termite patrol, they were supposed to be here at noon. So I'm trying to step and fetch it real fast. I'm going to put this on pause. The screens will stay up. Everything should stay okay, hopefully. And what'll come in and out probably is the voice, because I've got to obviously they're going to be drilling holes and doing stuff. Well, looks like so good, so good so far. So we'll see what happens here. Wow. I don't know what I was even saying. I think I got it all down. I think I was talking about the multi-account thing. Anyway, I'll make sure I'm doing that. I need to put a chapter for that. And this is a TopStep evaluation account, and there are 5 others behind it. So when I take a trade here or move a price or do anything, that is faithfully and immediately represented it to the four other accounts. Now they are all at a position where one more risk neutral trade to target, and they'll all 5 be in the XFA from where you get paid. My thinking is, when I started this, was to have the entire process from 0 to hero recorded 100% transparently and with full accountability. That's why the stream starts at 8 o'clock in the morning and goes through 1,500 every day. Yeah, Richard, you sure picked a great time to go. There's a thing that a lot of people don't realize. And I don't think I remembered to add that hotkey. I didn't. Trading, so many of us grew up, were raised with, or whatever, a work ethic, right? Where you typically reward is in some way related to effort. You work 8 hours a day, you work, the old full-time work, you work 8 hours a day, you work 40 hours a week, whatever it is, and you get paid commensurately with that. That's absolutely the opposite with trading. The bulk of your trading day will be anticipating and waiting for your setup, which you have pre-identified to have a positive expectancy, occurs. And then you rely on the law of large numbers and you take that setup whenever it presents. So I'll talk about that in a little bit I'm a little scattered this morning. Sorry about that. These guys were supposed to be here at noon, and they're here at 9 or 8:30. So I'm sorry. What can I tell you? I'm sorry. Anyway, I think everything seems to be plugging along here, though. That's good. Arankos. One thing about IRT, if you see this white progress bar at the bottom, you're getting automatic continuation in the full thing. If you don't, for example, like that, it's gray. This is not plotting anymore. It's frozen there, so you could analyze something. And to be honest with you, I don't know how the hell to change it. I can also here's our Friday's RTH session, and here we are today. Hey, money bags. There you go. Nice. Yeah, welcome to be here. BS bags. Big money bags. There you go. I got it now. Yeah, welcome here. There's just a few of us. Would be great to have a larger community, of course. It's just because it's a lonesome sport, you know, as I was saying. First of all, trading is a occupation of waiting and stalking, like a sniper or a hunter, more or less, I think is a good analogy. If you've done either of those. And it's a lonely sport, you know? Not that that's a bad thing. And I've worked on my own and been alone most of my life, adult life, so I don't have a problem with that. Some people have a tough time dealing with it. So let's move on to between drilling and God knows what's going on around here. Let me, if the noise starts to become unruly, I will, I'll just mute off the mic. So if some like, what is that crap? Let me know. I'll put on the music and mute off the mic. There we go. Both of those are automatic. I had the weirdest thing on Friday. I got a copyright strike that's on the music at the end of the day. Now, I pay for Epidemic Sound specifically so that there is never any copyright infringement or use rules or any of that crap. And for months now, it's worked flawlessly. But Friday or something, it was some strike. Said there was no problem for the account, but that the content wouldn't be available in some areas. And now this was the part that shocked me. It was a Clear to Loon, which is a tune that I'm pretty familiar with. I suppose we all are. It's not anywhere on the playlist, and the strike was for 15 seconds. I did a rebuttal or whatever to YouTube and said, really? So, there's 10 notes in the treble clef, and I suppose that there can be a similar a grouping of those in very many different songs. You're saying that there's a copyright strike for Claire de Lune for 15 seconds of music? I think that was, I'm sure it's some kind of screwy thing with book or YouTube or whatever, but I thought that was pretty funny. Anyway, meanwhile, back, I hear Hammer Boy going on here, so that's probably I'm going to shut up and watch my mic stuff and see if the bleed over is too loud. of course, the minute I stop talking, he stops hammering. Okay, anyway, let's get back to business here. What the trades that I am vetting now are the IB trade, the initial balance trade. I think that's going to be probably pretty loud, that hammering. I'm going to throw on the music and mute off. Yeah, it's irritating, but it is what it is. What I was getting around to was the fact that I am in the process of vetting the IB trades, initial balance. Remember the definition of the initial balance. It's the high or low of the first 1 hour. And let me point out something right now. I hope you saw that. The initial balance flag was down here, and then it just jumped up here to align with the line. That's a known behavior and not a bug. The minimum refresh time I can manually set with the cloud node column in Bookmap is 1 minute. The folks who coded up this indicator, which I bought from Bookmap, obviously did it much more frequently than 1 minute. So sometimes the line will move and then the flag will jump up to behind it. Absolutely known behavior, nothing I can do at this point. Maybe on some release or another, it will be dealt with or addressed or whatever else. Anyway, so what is the IB high? Or the IB statistic, I should say. It's a well-known old market profile statistic that says, I guess the best way to approach it is from our statistics point of view here, our statistics study, which is right here. And you see how IRT conveniently highlighted the open time. So it's greater than 97.9% probability in all four open types, today being 98.1% probability, that the IB high or the IB low is revisited at some point in the balance of the RTH trading session. What the hell does all that mean? Okay. It means the following. This is the IB high and this is the IB low. Now, they will continue to move down with price or up with price for the first 1 hour. We're now approaching 9 o'clock. This will stop. They will stop moving at 9:30. Remember, this is Central Standard Time. The market opened at 8:30, 1 hour, 9:30. So after 9:30, that statistic is in play, and it says that greater than 98.1% of the time, the IB high or the IB low will be revisited and taken out or, extended by price at some point in the balance of today's RTH trading session. Now, that's not a very good stat to trade because you don't know if it's 1 millisecond after 9:30 or 1 millisecond before 1600. You don't know if it's going to be the high, you don't know if it's going to be the low. But there are two trades associated with that statistic which I am vetting, and vetting means I have identified that setup. I have identified what I believe to be the qualifying criteria to enter a trade with that setup. and I'm capturing a data set, hopefully large enough to be outside of a random distribution, to determine if that setup and those criteria have a positive edge or expectancy or not. What does all of that mean? Well, first of all, you want to be outside random distribution. And let's start with the fact that the market is a binary event. There's only two possibilities, up or down. The outcome of the next trade is completely random, and the probability is 50-50. Also, the probability of the next trade has absolutely nothing to do with the previous market. There's a saying that we all hear every day that nobody pays any attention to because they think it's, lawyer boilerplate speak. Past performance is not indicative of future results. That has got nothing to do with the law or anybody else. That is a statistical fact. So, the two IB trades are as follows. There is an IB failure where we would come up through, not be able to continue on, and fall back to the mean. It is essentially a mean reversion trade. Outside in, outside in. It's a mean reversion trade that's triggered by the IB, initial balance high or low. The other trade, which is called the IB continuation, and I bet you can guess what that is. Yeah, only the ES, money bags. So, the continuation trade is that we come up through, test, meet the criteria, and then continue on. Now, typically, those two trades you would expect one or the other of them based on context, which is why I'm always harping about keep, firmly rooted in context. If it is a rotational day, which trade would you expect? You'd expect the IB failure. It's rotational. The IB failure is a mean reversion or, suggested in a rotational day. If we're ripping and snorting one direction or another, we are trading directionally, price discovery, then you would expect an IB continuation trade. The point of the story is that I am not looking at any possibility to trade until after 9:30, because that's when the IB stat has been made. Okay, and here comes a guy with some sort of a trencher or a weed whacker or some goddamn noisy thing. Sounds like a chainsaw, so I'm going to mute off here. Yeah, no problem. I'll try to jump in here between chainsawing and hammering. Oh boy, the joys. Yeah, so here we go. One thing, another thing that's worth remembering here is that I also, in these volatile markets, I think it's extremely important to always remember your prime objective as a trader is to preserve your account. You do that by managing risk. When I said, setting up the stop loss back on the back over here, the first thing you need to think about is your account. You ready for here? Okay, I got to mute. Here he comes off here in here now. Well, I think they're coming back to normal here. One of the things I wanted to say, we have now we've now crossed over the IB set, and we've taken it out 1, 2, 3 times here. What I was going to point out, which is something I find real important, do not ever trade to the statistic. In other words, back over here, oh boy, we're above the POC, we're above the mid, we're above the VWAPs, I'm going to go long because I know we're going to take this IB high. Well, we did. But a lot of times we do this and then we go the other way. So just, you know, in my data, it's never trade to the statistic. And now you have to ask yourself, my vetted trades are the IB failure, outside in, or the IB continuation. Test up, test down, keep going. We are dangerously close to the all-time high again, and these, I don't know how much longer they're going to be able to keep cracking the water cool over there, but they seem to not be able to get enough of it. I guess it should be done inside. Wow. doesn't stop. I would, my initial reaction is that they're going to take it higher, but that's just, this would be essentially an IB continuation setup. So we can zoom in. We're still 1 point high. We break the IB, trade up, trade back down and test it, don't get anywhere, come back the other way. So what would happen if we'd have taken that signal? There's 67 quarter. What do we need? Well, we need 68 quarter. Or what am I talking about here? 25 quarter. So we would not be scaled yet until we got right up here. Now the risk neutral scale's on, and then you just put your helmet on and sit back. And I fully expect they're going to take out this previous RTH high and the all-time high again. That seems to be the look at it. How many times you want to do it? Every one of them. Every one of these days. Irrational exuberance, it would be called by Alan Greenspan. See here, somebody's knocking again. Well, I don't know how far I'm going to get there. Now they're drilling concrete, so. Oh, well. That's what happens, eh? Have we got the all-time? No, we will, though, pretty quick. What I was saying was, look at all this irrational exuberance here. Do. Every one of these is a new all-time high. This is the famous Fed rate meeting. Here we go. What are we doing for volume here? We're still way low for this exact time of day, but the ATR has bumped up now from a low of about 2.5 up to 4. Was up to 5-ish or 4.5. I'm going to put out my standard question that I do every day. This is the harmonic rotation study, and it's accurate with mean, median, and mode for up and down rotations. I have no idea how to use that or how it could figure into daily trading. My risk neutral package, the stop stays the same. I think it's kind of like ATR. Some people use a stop, which is a multiple of an ATR, and then profit targets the same way. I do not do that. So if somebody has a brilliant idea about this, utilizing these harmonic rotations, speak up, that'd be great. Yeah, I was muted. Thanks a lot, though. I'm trying to... they're drilling concrete and running around here. So we'll see, but thanks a lot. I think everything is hooked back up proper. Let's see. You know, my monitors and desks back in place. I use 2 stand-up desks and an L jammed into the corner. This main desk here has a 4-monitor rack in front of me, and the 2 lower screens are my trading screens. They're 32-inch 4K high defs. The 2 upper ones are powered by a separate computer. And then I have to my left on that other stand-up, I've got a vertical 27 high def, which is run by this trading machine, and that's got OBS and stuff on it. And around the corner a little bit is my older workstation, which has another monitor. Anyway, so I'm just kind of mentally checking everything's working. Am I working? That's the next question. Here we go. I told you, all-time high. Who's your daddy? So that IB continuation trade was, or will soon be, a probably pretty good trade. Now, I need something that's worth pointing out here, I think. We are not trading to scratch. In other words, when you assess an entry, the probability or the possibility or the whatever of it for an entry, you need to think about it in terms of your profit target. Where the hell can this thing go? In this case, it's good. We've got stops, obviously, a whole bunch of stops right above 67.30 here. You can see all the liquidity's been in the market for a long time. We got another couple hundred, almost 300 contracts that came into market right here. And they take out these all-time highs, there will be a pop because there's stops there. All the top pickers and oh God, we're going to the moon. It's falling out of bed. That was a blow off top, all that stuff. They're all up here with their stops. And now watch. We're going to take out this all-time high in a second, and it's going to pop to, my guess, will be around 34. Just certainly not anything to think about, but it's definitely, there's a new all-time high. If we don't take a bunch of stops up there, that'll be kind of surprising to me. And I'm extremely disappointed that I'm not at all disappointed. Yeah, there's no such thing as a missed opportunity in trading. There's only the next one. Surprised we didn't get a pop here with those stops. But they did get a new all-time high, so they're all walking around the floor high-fiving themselves, I'm sure. And we are way over so we've taken out, just looking backwards at all of our levels here. We opened on the overnight volume point of control. We've taken out the mid, close, ETH high. Now we're up here at the previous RTH high. They just fall in line. And the IB continuation trade would have been lovely. How would you have used context? Just look at this. Here's our vertical line, right? This is the session start. What is the context? Is there any question in anybody's mind the context is up? Up and to the right. Why in the world would anybody short this market so far? That's counter trend counter context really a bad idea, in my opinion. I want to look at this from the point of view of giving myself every opportunity that I can for success. Remember that this is a random market. The outcome of the very next trade is 50-50. So what do you try to do? You try to stack as many pieces as you can to positively affect your expectancy. Hi, Panda. What's all this noise? Do you know what all this noise is? You don't know, huh? Okay. She usually likes to say hello to Antonio. Yeah, I know you, Panda. Well, yeah, here we go. We did get the 34s, right? Yep. Okay. that was a real nice trade. Now remember, my risk neutral 2-lot package is obviously 28 quarter is our, there is, where'd it go? 28 quarter, wherever that went, right there. That's the scale. Okay, great. Helmet on, feet up. However, the profit target needs to be 12 points or 48 ticks. So 25, 35, 37 quarter. We need to get up here, 37 quarter, 38s for our T2. And I would suppose that we shall do so today. We got an expected move up here at 41.75. Let me just say that that is something I'm just trying to figure out how this works. This is an expected move is an options thing based on the at the money strike for the SPX. These are the daily expected move. The idea is that this is I think the idea is it's one standard deviation over the ETH, the ETH from the ETH Open, and it is expected to contain the movement for the underlying. And I have no idea. And there's the weekly move. So I'm just trying to track it to see what the hell's up or not. Over here is what I was talking about, and I think I was on the wrong screens. The IB high, the IB continuation trade was very definitely there. So this is a missed vetted trade. I have an entry for that. And when did that occur? Let's just see. 9:38. Oh, I got it in there. Okay. Try to keep some sort of common sense and continuity in these chapters, the timeline things. So what I was saying was, this is the IB statistic taken out. Well, actually right here. Then we trade up. So this is a good trigger and a good signal. Get back over here where we can really see it. Now, that was the entry for the IB continuation trade. That's 25, let's say 25 half because I'm slow. 25, let's call it 26 because I'm slow. So 29, right there, we're scaled. Now what we need is 39 and 2. We need to get 41s, which is kind of dicey because we're above this 200 liquidity up here to get to our scale. That's the goal of the trade. And you see how you can zoom in as much as you want to see your trigger and the parameters, the rules that would add up for the to validate the entry for that setup. Context is straight up. Any short today, you would be joining the retreating army. That would be a real, in my opinion, bad idea. Now I'm summoned by my termite guys. I'll be right back. Well, they're using a hammer drill on the foundation, and a 2-cycle powered auger. What a disaster. Well, anyway, I hope you're minding your risk, that somebody got that IB continuation trade, and be patient, stay in context, and if I survive this mess, we'll see what happens. Sure, I'll survive it. I'm not so sure about our big cat. You know, he's a big scaredy puss. He's hiding in the closet somewhere. Well, the minute I say something, of course, he's going to hit that concrete hammer drill again, but I'll try to get a word in edgewise here. Got quite a bit of liquidity chasing us up. Look at that. Yeah, thank you so much. There we go. Well, I'm going to take a risk here that we're going to get a moment to speak. I think they're about done, actually. I hope. So we have the VPOC migrations up here. That is another setup, which I will vet after a bit. We still haven't reached our 79, which would be the T2 for an entry here at 76. Actually, it would be 78 would be the 38. I'm sorry, would be the entry, which would be the T2. Likely, we're going to get it up here. I've lost my cadence, right? I'm with all this running around, moving desks and monitors and trying to stay ahead of these guys and still keep things operational here in the office, not to mention the rest of the house. So one of the things, which brings up a good point, if you're on tilt for any reason, push the mouse away until you've fully understood why, and it's over. It's the same. It's all basically boils back to our monkey mind, right? Trying to remember my new hotkeys here. Yeah, it boils back to the monkey mind. I mean, whether you're a creationist or an evolutionist, I think both camps agree that humans have been developing for a long time. And I'm sure you understand survival of the fittest or selective adaptation. You know, if your ancestors weren't clever, they ended up something's lunch. Consequently, our minds have all this pre-wiring built in. That's where FOMO comes from. That's where Hyde comes from. That's where the desire to be right comes from. That's where all of those mental boogaboos come out to see you. And it's very important to realize that because it's part of our DNA, it's part of our wiring, you are never going to get rid of that. You're never going to eliminate them. But it's tantamount to success in trading that you recognize when those things start to hit and you don't act on them, and you mentally and intelligently understand what's going on and then remain clear thought. FOMO being probably the most famous of those things. And they kept us alive, you know, those kind of emotions kept us alive and kept the species alive and evolving. Years, you know, way back when, but that doesn't help in trading. It's actually the other way. If you haven't slept well. Better also remember that 90%, well, I don't know, pick a percent that you like, of our trading effort and our trading success is based on our mind, on our mental ability. It's much more important than all the monitors and charting bullshit you can dream up, you know? If you are not processing the data accurately and methodically and rationally, then you're going to get hammered. That's where FOMO comes into play. These people that say, I can't keep myself from overtrading. Of course you can. You have to recognize the fact that that's the emotion going on in your mind and relax. You know, it's like, well, anyway, I have a couple of analogies for that, but so that's where we are. I think those are important things. It sounds like that dust might be clearing and these guys might be through with the noise on, so that's good. Yeah, I hope somebody got this IB continuation trade. This was actually pretty much perfect. the signal. Here was the stat. Here's the signal and the trigger. And let's look at that on a little bigger basis or higher time frame or whatever else. Whoa, that's a little too high there now. This book map, I tell you. All right, so here we go. Let's look at it up close and personal. From the hard right edge. Here's where I said, don't trade to the statistic. You took that, if you thought you were going to get somewhere right here, what is that, 24? Well, you're okay. You didn't get stopped out. But you were sweating bullets. Here is the statistic. Here is where the IB, it's past 930. And the IB statistic, the IB high, has been exceeded. That is the statistic. So as of right there, that satisfied 98.1% of the days where we look back over 2,000 trading days and open in a lower in range configuration right there. Now what are we going to do? Well, we're going to watch it pull back a little. We're going to watch it come back up through, come down. Got an iceberg forming in here, suggesting continuation or support in the direction of continuation. What else happens here? Oh, there's the perfect setup. We test through. Sellers aren't getting any place. And what happens? We start up. That's your entry. That's the trigger. So there's the statistic. Here's the setup. And there's the trigger. IB continuation trade. And the rest is history. And that's from the hard right edge. So this is not, anybody can trade successfully looking in the rearview mirror. That's the stock and trade of most of the internet gurus. Now we need to get up here at about 78-ish to achieve our I sound like the King of England, had I taken this setup and trigger, I would be scaled about here, and I'd be, hopeful that we're going to get up here to 38, and that would be the T2. At which point all 5 of these contracts would be over the profit target and into the XFA. And then there we go. Wow, I guess it's over with here. Noise is central. I don't think I missed anything, actually. Apart from that trade, but. So now, in my trading world, currently, I don't have anything to do because that IB trade has happened. Continuation as expected. Now I've got no opportunity to trade until we would come back down and test that again. That would likely happen later on in the day because I'm in the vetting process of these IB trades. What's going on here now? I did make some quite some good progress finally at long last with the backtesting. We'll take a look at that in a minute. What's going on in the other world here, maybe? Well, we've got this new Fed guy he's pretty excited about being over there. He's got confirmed on Tuesday, and he's had about the fourth speech he's made. Pretty crazy. And I didn't realize it, but he's going to continue to remain an employee of the White House, as well as being a Fed governor. I didn't think you could do that. I didn't think you could. Seems kind of conflicty of interesty to me, but anyway. And then we've got the press secretary briefing at 12. And 1500, some Trump stuff. These things that I point out are not political, or I certainly don't mean them to be, but they are highlighting unknown information risk. If you've ever been a project manager or been involved in projects, you know that after you get the project established and figure out the timeline and the resources involved, the first thing you want to do is identify any potential risks to that project and that timeline. And then you make a mitigation plan. So we have every day a list of the reports and things that are coming out and when they are. And therefore, we can plan to mitigate our risk. And in other words, not be in a trade going into those numbers. For example, non-farm payroll, or tomorrow the I think it's PEI. But the worst case scenario is an unidentified or unexpected risk to a project, to trading, to anything else. And that's what happens. Now, it's really great that they're starting to be more forthright with scheduling this stuff, so it's easier for us to be prepared. What's really dangerous is when there's some random, tweet on X or whatever Trump's thing is, something social, Truth Social. Something like that, or some random, somebody passing by a microphone or a camera and saying something that throws the market for a loop. That's really dangerous from a point of view of us as traders, because that's an unknown risk. So that's the reason I try to, analyze this stuff on a regular basis. And I'm really happy that they're encouraged that these guys, like this Miran, and the press briefing, and Trump's going to say something at these times. It's really great that they're starting to, these didn't used to happen. It would just drop out of the sky. So that's really good. That's really good. Yeah. You see that we're trading basically directionally. Context is up. Pretty obviously. And what are we doing else? Well, we are not rotating, are we? We've got 1, 2, 3 pretty distinct distributions. That is price discovery, or more or less a directional market. That was one of the qualifiers in conjunction with our higher time frame of context, that I would be looking for an IB continuation trade, not an IB, not calling the top looking for a rotational day. So there's that. I chose to vet the IB trades first because there are two, which I've already described. One is for continuation, where we have a directional day, and one is a mean reversion, where we have a rotational day. So I have two. When this is over, I will have two vetted trade setups and trades, one for each market type. And interestingly enough, probability-wise, there is a much higher percentage over the entire, I think it's 220 trading days in a year, maybe. I don't know, I have to Google that one again. I don't ever think about it much. There's a much higher probability for a rotational day than there is directional in the markets, in the futures market. So there you go. As opposed to, for example, had I only started out vetting the mean reversion. Well, that's only one direction, right? And that would only be applicable in a rotational day. So when I see a day start to develop like this, if I'm working on a mean reversion trade, I just put the mouse down and go, chase mama, have breakfast, whatever it is, because I'm not going to have a trade. You start making up reasons to trade or seeing patterns, reverts back to our monkey mind again. And that can be dangerous. And humans are really good at that. They're good at rationality, and rationalizing what they want to have happen, and seeing patterns in outer space or seeing patterns in a random distribution. Good deal. Okay, where am I now? Who's on third? I don't know. Just some more explanation about Bookmap here, maybe. This is the way I have it set up, that I'm not sure I cover everything off this morning or not with all this ruckus going on around here. This is just the last price. The line is the last price. That's all. These volume bubbles can be 3D, but I figured why waste the computer? Why waste the computational to do that? But what these balls represent, or these dots represent, is they're sized by volume, obviously, and then they're colored by delta. There you have it. Now let me see if I can get back to where I might normally be around this time of day. Let's talk about trading as a business, not video game or gambling. You need to recognize that that the market is random. And as I said earlier, the outcome of the very next trade is 50-50. It is a binary action. It's essentially flipping a coin. Can only go up or down, right? Two ways, that's binary. All this horizontal movement that's here, that's reflected, is what we put on it with time. So what you need to do is, and I've talked about this vetting of the IB trade that I've been doing, you identify a setup, which is a pattern that's you believe, either somebody told you or, and let me first say this, always vet everything yourself. If I'm telling you all about the IB trades and what the probabilities are that I've discovered, do the work yourself, right? Because then you know what went into that statistic, and and then it gives you much more confidence to rely on and take that number and take those trades. Anyway, you identify the IB continuation trade, for example. You then capture you identify further the parameters and the trigger that qualify that trade for entry. My suggestion is start at the higher time frame down. In other words, what is the high time frame doing? Well, we've been going up. What have we been doing today? Context is up. Are we directional? Looks like it. What would be the anticipated IB trade in both of those environments? It would be the IB continuation. So you capture a statistically significant data set of those trades taken based on those parameters. And by statistically significant data set or sample set, I mean you take enough of those trades to get outside random distribution. Random distribution is real simple. If you flip a coin 10 times, nobody is surprised if you have 8 heads and 2 tails or whatever, right? A non 50-50 distribution of those sides of the coin. And everybody knows that a coin is 50-50. Fair coin. So a statistically significant data set would be you flip that coin 1,000 times. Now you're going to be approaching 50%. You have gotten those instances or those occurrences of that subset outside random distribution. When in trading, it's very, very, very normal to take 4, 2, 3, 4, sometimes 5 or 6 losses, stops in a row, following the exact proper setup, not FOMOing or not any of that other stupidness. Well, thinking backwards, that's why you better have your stop loss predicated around your account risk parameters. How many stops in a row can you take before you blow up? I have a spreadsheet that shows you that, but anyway, I'll get to that later. So you've identified the trade, you've taken all those sample occurrences or trials in your outside of random distribution, and then you mathematically and scientifically determine if you have a probable edge or expectancy or not. And if you do, then you take every one of those trades that presents itself in the live market. And you rely on the law of large numbers to compound that edge or that expectancy to your bank account. And all of this studying and backtesting is best done away from the live market. That's what I've been working on the backside with the IRT backtesting, which I just made huge progress over the weekend. So now to revisit those things, it's important to understand that win rate taken by itself is complete BS. It is the stuff of which internet gurus are made from. It is meaningless. I have a 95% win rate. I make 1 point every time I win, and I lose 10 points. I risk 10 points on every trade. You're broke in 5 trades. Your account's blown up in a small number of trades because your risk to reward ratio is upside down. Taken in conjunction with the risk to reward and average trades, then you can use win rate to calculate your expectancy or R value, or, there's a lot of different ways to look at it. But typically one of the calculations or one of the formulas is that win rate times average winner minus loss rate times average loser is the expectancy. The number that you really want to define or be able to identify for yourself for each setup is expectancy. And then you can rely on the law of large numbers to manifest or to compound that expectancy rate to your bank. This is not something I dreamed up. These are the revelations and the methodology of the most successful traders and hedge fund managers in the world. Once you listen to what they say, long enough, you'll find it'll come out somewhere in the conversation. Well, it's probabilities. Ed Thorpe, Paul Tudor Jones, Jim Simmons, most successful hedge fund manager, Renaissance technology in the world, in history. Ray Dalio, Tom the trader, the best loser wins guy. Tom B in the Traders Lab, Rod, Static, pick one. They all, Tom Sosnoff at Tasty, those guys, it's all about probabilities. Everybody knows that. Trying to predict the market is a fool's game. You stack as many of the parameters or the pieces, puzzle pieces as you can in your favor, and then you only take a trade which has a positive expectancy in that situation. And that's how you're going to make money. And if that also sounds familiar, one other thing that's important to recognize, that is precisely the business plan of a casino. It's the gaming theory from the point of view of the casino. So be the casino. You be the casino. Don't be the gambler. Casino will play no game on the casino floor with the public unless they have thoroughly developed and tested that it has a positive edge or expectancy and with specific rules. Then, on the casino floor, their only mission in life is to play that game as many times as they can, and they rely on the law of large numbers to compound to their bank account. A gambler wins. Pit boss doesn't shoot the dealer. They don't change all the rules. They deal the next hand. You have a losing trade. You wait for the next setup. You take it. Simple. You know that there will be a distribution of wins and losses because we are functioning in a random environment and the probability in the next trade is 50-50. Case closed. That is how you approach trading as a business to develop a sustainable, consistently profitable business. It's not adrenaline. It's not trading your, wearing out a mouse, clicking every day. It's about doing the homework, which is boring and takes a lot of time. Doing the work, identifying the setup with the positive expectancy, and then the specific criteria. Then when those criteria present themselves in the live market, you take the trade and you rely on the law of large numbers. Boop. That, my boys and girls, is the Holy Grail. So there you go. Merry Christmas. Send money. And that's why these guys get so tickled about all this YouTube shit every time you see one of these win rate guys. It's just completely useless without a risk to reward ratio and a proper calculation. Another good way to calculate that, which I am not completely sure I have down pat, is the R multiple. Your risk is 1R. How many positive of those R values do you have is your risk to reward. And I like that a lot. So mine is 1 to 2.5. In this trade right here. What am I risking? I'm risking 24 ticks. What will I make if I make both profit targets? 60 ticks. 60 divided by 24 is 2.5. So I've got one risk is one risk per contract is 12 ticks. One positive reward is 12 ticks, or in this case, 48 ticks. So you're essentially risking 24 ticks times 2 for 60 ticks. There you go. I like that R value better. You don't have to do percentages and probabilities and crap. So there's that. Now we approach the hooting hour here at 11 o'clock. Let me go see what's going on outside. It's awfully quiet here. I'm suspicious. All right, I don't know where I was on that one either, but then it's finally over. They're paid and done and dusted, so there we go. What a day. What a day. Let's see now. It's 11 o'clock. So let's... okay, this guy's speaking. Mr. Speaky Boy speaking. And then we got the gal, and then we got Trump. Okie dokie. Oh, now they're going to take the run for it, are they? Oh, yeah, we got our... Well, there you go. We got our... getting close to our target up here, 38s. Assuming this is hypothetical, rear mirror trading, we took our IB continuation trade as it was perfectly set up. And then our T2 is going to be up here at 38s, assuming that we got in at 26. Our second target is 12 points, so 26, 36, 38. Right there. Pretty close. Here we go. We're going to get there now. Unfortunately, I'm not on it, and boy, words cannot express how disappointing that is. I am so glad would be so glad for this to be over. This mouse is just a little too spooky. There we go. Remember, I try to keep it one point high and always keep context in view. And I do that with Mr. Blue Boy over here, my visual reference, which is just a vertical line that I throw on at every session start, ETH and RTH, and then I can always just glance left, and if that line isn't showing, I know I've got to do something. Oh boy. Well, I'm going to now focus on my back testing, that I've got that all worked out. And I'll change them up. Now I have the IB failure completely coded properly, and I'll change tonight for the IB continuation and then run those back tests. And there we are. That might be kind of complicated. I'm just thinking about that. This is the IB Well, this is my test, my back test environment. And investor.com has a pretty comprehensive back testing engine. This is today's trade, obviously. These lines are just custom indicators that I built for this chart. Again, strictly for my visual reference. And now we're going to get to what would be that. Remember that if we tag out 3738, that would be our T2 with no heat, and I mean zero heat. Look at that. Nothing. Scale, pretty bummed out. Nothing. No heat whatsoever, even remotely. So that was a real perfect IB continuation. Back to this. Back to the IB chart, or the backtesting chart here. These lines represent the rules which we have determined for the IB failure trades. And essentially the lines here are the following: IB high, IB low. Notice that it starts plotting at the proper time after 60 minutes. The reason for this is when I see a backtest plot, which I can send to the chart, if there's something going on over here, I know that there's a problem with the code because it's not supposed to do anything until 9:30 because there's no IB yet, right? Just common sense. This is the pullback area, which constitutes 3 points below the IB high and 5 points below the IB high. So it's between 3 and 5 points pullback. These dotted lines represent 1 point either side of the IB high. The same exact values are down here. Then I have all of my V pound numbers up here for my trade configurations, and this is the IB failure trade with all the rules. And succinctly what those rules are the following. Oh, that's a little too following there. IB, and this likes doing this kind of thing much better after the trading day. Okay, so I can tell you right now that the IB failure is a failure. This is the IB high. There's where it sets at 9:30. The first rule says that we trade up from the bottom and we take the IB high with 1 bar. The open is below the IB high, the close is above the IB high. There is rule number 1 satisfied. Rule number 2 would be, I don't know that it's even possible today, but let's look and see. Come on, man. No, it isn't possible. Okay. IB, so there's our first rule right here, right? Can you see that? I hope so. Here's our first rule. Our second rule would be that at some point after rule number 1, price pulls back to close within the pullback zone. rule 2 or rule 3 then, and the trigger, the buy or the in this case the sell signal, because we're working off an IB high, would be that price after rule 1 and rule 2, it trades back up to within 1 point either side of the IB, and we sell, looking for an IB failure from the IB high. Obviously, I'll code up, and today would be a fantastic example. Right here we have it. Here's our IB statistic. Here's our pullback. Here we didn't have a pullback, but here we've retested, and there we go. How beautiful of an IB continuation trade would that be? That's what I'll work on coding this evening. The IB failure from the bottom side is going to not be very easy to see because there's no bars down here. It's the same thing. Price trades down, takes out the IB, rule 1. Price pulls back to the pullback zone, rule 2. Price trades back up within 1 point either side of the IB low, rule 3, and the entry signal. Short, and that's to go long. Very simple. The way the back test works is right here. And these are the rules that do all those things that I just got through saying. Well, we know that there's going to be no IB failure or anything else right here. Looking at 1 day back. Actually, there could be in Friday. Let's look. Before we get carried away, let's try to analyze this as best we can. Mom's making the cats feel better. We have 2 cats that literally rule the house, and I got to admit they're great. I would have never expected my wife to be so fond of animals, especially the one. Lucky. So here's that. Let's get back here to Friday and see what we have to expect. Now here comes Friday, right? Because this is a RTH session only. And I'll just scroll back to the beginning of the IB. It's only Friday now. You see the time's going past there. There's the IB on Friday. And if you don't believe me, what's that bar and what's it say over in the right here? This is 19th of September, right? That's Friday. All right, so here you see that we have all the IB high, the trigger, pullback zone, IB low, trigger, pullback zone. So what do we have that looks like it's setting up for us in the IB failure from the IB low on Friday? Well, price trades down. Ooh, takes the IB high right there. That's the statistic. That is rule number 1. Boop, 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 boop. Rule number 2, I think. Rule number 3. Long. So we should be long from about here, if I'm right. I can't quite see that, but if we're on long from here, then we should get T1 and scratch on T2. That's my guess. So what we'll do now is we'll look at September 19th. 19th. So we can set up we can either look back 2 days or we can set up the specific day. Let's put it back there a couple days and see what happens, okay? Oh, yeah, something else I forgot to show you. There's the session, there's the instrument, 2 contracts, These are the reports that I want. Boom. There we go. Net profit minus $300. We took 2 trades, 1 long, 1 short. Looking at 2 days, the 19th and the 22nd. Pretty cool, huh? And then all of this information is available. Immediately available, including MAE and MFE and all that stuff. Now this is one that I always check first, because this validates for me, is the stop properly being respected? And it is. Typically, if there were a winning trade, it would be 750. But we know that we only took stops, a stop. And then, on top of all of that, we can review the individual trades. And there they are. On the 19th at 10:03, we took an IB long. That's off the bottom. Remember, we just looked at that. Let me close these. Let's see here. How can I do this? Okay. Now remember, we closed. We said that was the first stat, rule 1, rule 2, rule 3. So 10:03, we went long off the IB low, and we got stopped immediately. Then the second attempt was on also the 19th at 12:17. Now, I'm not doing a very good job of showing you guys all this stuff. Okay, so let's say 10:03. Right there. Oh, no. 10:03. Aha, there we go. 10:03. That's our entry, and there we have it. So here is, there's 10:03, and there's where we closed right inside that. That's the first time we closed inside that range, 10:03. That was our signal to go long. What did we do? We went straight down and stopped out. Yeah, absolutely correct. The rule is working perfectly. Let's look at the next one, which is 12 something. So the next rule is 12:17. We go short, so that'll be off the IB high, and we get T1, and then we take a stop. Let's try to see all of this somehow. If I can show you that somewhere or another, so you can see it. I should figure out how to make another way, it wouldn't work. I was going to say to show both monitors at the same time, but these are 32-inch 4Ks. You guys wouldn't, I don't think anybody would be able to read them. Well, you missed me killing termites and missing a most beautiful IB setup. What I'm doing now is going over my back testing rules, which I have just developed and have tested out to work perfectly, so I'm really happy about that. And we're working on the second one. Here's the first IB failure. This is for the IB failure only, both long and short. And I'm just confirming these rules, and so far we're perfect. Now we're at 12:17. We take a IB high, which is up here. Oh, come on now. 12:17. That ought to be about here-ish, maybe? Oh, 12:24. Where are we? 12:06. There we go, 12:17. All right, so what did we do? There's rule number 1. We took the IB high. Here's rule number 2. We pulled back into the pullback zone. Here's rule number 3. We touched or exceeded or gotten into within 1 point either side of the IB high, at which point we shorted. We traded down to here and got 1 point. Just as you see here at 1228. Let's just see. Right there. Well, between the two, right there. 1228. And then we trade back up for the stop. Love it when a plan comes together. I can't even begin to express how happy I am to what I've had for a long time, and I mean a long time, are various backtest rules. IB continuation, IB, a lot of different stuff up here, right? But not really the proper setup that I thought in my mind was the right way to go. And this is a rule-based configuration which several of us, primarily Rod and Statistic, determined to be a real valid set of rules for an IB failure, in this case, from both IBs, high and low. And of course, then, now that I have it working properly, and for a couple of years, I've had the trade management piece working, which is entry, stop, 2 targets, etc. And then a end of day exit. So the way I'm doing these is in modules, right? So I had the trade management piece set up, and then I was controlling that with just a single line long entries or long trigger criteria, but not in sequential rules. Now I've developed a sequential rules methodology which works. So, for example, here's the rule number 1. We don't get rule number 2 till clear back over here. 30-something minutes later. Then we get rule number 3, which is the actual trigger. That's the way trading should work. And that's the way I'm pretty happy I've got this working now. So what I can do now is I flip these around and I'll have an IB continuation trade. I may put them all together at one point so that you just run it and then you get all the IB trades, failure or continuation in either respect. The way this works when you send it to the chart is the following. So here you have that second trade of the 19th at 12:17. Unfortunately, that indicator that they call this is coded by Chad years ago. It doesn't help me at all. I can't add an extra profit target. I can't get that to total to properly sum or account for the profit targets and stops. And I want it to flag the different rules. This is all I've got. So this is what I work with now. And here's a perfect example. This shows negative 12 ticks. It's actually a scratch. That should be 0 because we have a positive 12 ticks right here. Now, I don't care between you and me and the gatepost because I know what it means, right? But for someone else or for someone watching the stream that isn't familiar with IRT, they're going to wonder, well, how the hell does that work? If you start with 2 contracts and you take 12 ticks and then you get 1 stop over here, how did you end up short 12 ticks? Well, you didn't. You ended up short 0. But that's a function that I haven't been able to get under the hood far enough to find that I can edit that. So this is how it would present. Any kind of a positive price action from your entry is this color set by me, and any kind of drawdown per the rules is the red. And then here you have the entry, here you have the T1, and here you have the T2. Not the location, but the bar. So what I've done with that indicator is using V-pound variables, I draw this horizontal line from the entry at the stop. You notice that we got stopped right there. And for the T1, this green line, and it can be on either side, right? So there you have it. And here's another one. Here's the first one we looked at. And what I'm primarily working on now are the rules, right? So I'm so happy that I've been able to do that. So here's the rule number 1. Takes the IB low. There's the pullback, rule number 2. And here is, I think so, or is it this one? And here is the entry rule into this plus or minus 1 point, and that's where we got in, where we went entry, and that would be long. So we just had a little bit of profit right there to the close, and then we went boop, straight to the stop. So there you go. So I'm pretty happy about that. And that's how the backtesting works. So I won't be needing to do all of this obnoxious. It's not obnoxious when you put in a lot of screen time, but it's a pain in the ass. Now we have taken out, and we continue to be irrationally exuberant. So the perfect IB statistic is right here. The perfect IB continuation trade entry was there, keeping the context in view as usual. And we would have scaled there, and 38 was the T2 target. So we're well past that. So that would have been T1, T2, all 5 contracts in the XFA, and absolutely no heat whatsoever. And just for money bags there, who was on school run duty, which I just got. Our daughter just graduated from high school this past spring. I've been doing that for a while. And good for you. So here is what we would consider to be, where'd it go? Here we would consider to be from the hard right edge. Here we come. It's not 9:30 yet. The statistic has not been set right here. Do not trade toward the statistic, as I have said before. Trade down, we trade, then what happens? I don't know how to make this go a tick at a time, so sorry. There we go. Now here, the statistic has been taken right there. It's 934, 930, whatever that is, 33. That means the IB statistic is now active. So we're looking for IB continuation or IB failure. In this context, we're looking for, I'm expecting an IB continuation. Is this a rotational day? Doesn't look like it. Looks pretty directional so far. That suggests the IB continuation trade, because an IB failure is suggested by a rotational day. It's a mean reversion trade. It's an outside in. It's a mean reversion, balanced or rotational day. So now we're watching for the IB continuation trigger. We've taken the stat, trade up, sorry, trade back, trade back down through the IB low, through the IB high, I'm sorry. We got sell delta and nothing below it. They didn't get anywhere. Your spider sensors are tingling because you think that is the perfect setup for the IB continuation trade. And if you're, Johnny on the spot and fast, you got it here, you took it back here when it came down, couldn't even get back to the IB, whatever you want to call it, however you want to look at it. and call your entry at 26. If you're a slow doofus like me and you got in, your entry was slow or your reaction time was slow, you got in right there at 26. Then what do? Well, now you put your hat, you just put your feet up and you wait. So there's 26, there's 28, there's 29. Not quite scaled yet. Okay, there we go. Now we're scaled. It's traded through 29 to 29.25. Now you're risk neutral. You put your helmet on, your feet up. And what happens next? Now you're a freaking trading wizard, right? And there you go. If you're not vetting this trade, if you're not vetting this trade, then you can start aggressively trade managing. You don't have to leave your T2 target exactly at 28 because 38, sorry, at 38, because you're no longer concerned about it being part of the statistically significant data set. When you're vetting the trade, in other words, when you're using a back test, when you're back testing, or when you're vetting it by just capturing live trades, you cannot change the stop, the T1 or the T2 in any manner. If you do, that trade cannot be included in the data set. It's not statistically significant. You're trying to determine what percentage of 100 trades or N number of trades you took reached T1. What percentage of N number of trades reach T2? How the hell can you do that if you're moving T1 and T2 or your stops all over the place? You cannot. So, but after you've done the back test and you have your statistic in hand so that you know when this happens, you take that trade because you have a expectancy of making money on that trade, then you can say, okay, where the hell was it? Where's 38? So here's 38, right? You can say, well, but I think we traded right up here. We've got I think we're going to be looking for higher ground, or however you want to look at it. You can keep moving you can move your target, your T2 up. And then you could bring your stop up under these swing lows. Under this swing low. That's trade management is up to you, and that's down the road a while. But that's how you let your winners run and keep your losers short. The key to the whole thing, in my opinion, size your trade so that it is within your account risk parameters, and abso-freaking-lutely never touch your stop unless you've been scaled and you've done some back testing to show that, okay, when I get my scale, I have a higher probability of when I bring my stop to entry, for example, to break even or something. You know what I mean? But under no circumstances ever in a gazillion years on your child's, the life of your child, do you move your stop away from entry. That has got to be the most fundamental mistake that most traders who haven't recognized their monkey mind and recognize what is making that happen. Why are you acting out on those emotions, and where the hell did those emotions come from? They came from your wiring. And you have to be continually aware of them and don't act on them. That's FOMO. Fear of missing out. That's wanting to be right. That's the desire. It's more important I was right. I called that trade. More important than, okay, I had a potentially high probability trade set up, and I took that trade and it played out within my statistics. That's the difference between a professional trader running a trading business that's statistically consistently profitable and a gunslinger who's going to blow up tomorrow. There's a friend of mine who comes through here. I mean, he's also a member here sometimes. He drops in and out, which is okay with me. But obviously, well, I'm back in the funded account. Oh, great, man. That's really cool. Well, I blew up 11 of them last month. Jesus Christ, dude. Maybe you ought to just manage your risk and take it a little slower. We're talking 150, or whatever. I mean, that's not a winning strategy long term. And I'm in this for the long term gain. My career evaporated a little while back. And this is where I'm hanging my hat to take care of my life and my family. And, this is my career now and has been for a while as a supporting career, shall we say. But this is two different, and I'm not saying there's a couple things I'm not saying. Very definitely, this stream or my intention is not about this is my way or the highway. Absolutely not. Whatever you're doing that is successful and giving you consistent, sustainable profitability, continue that. This is the way, what makes sense to me and the approach that I am using to achieve that consistent, successful profitability in my trading business. Now, if completely other side of the coin, you really get off on a good adrenaline rush and clicking that mouse gives you one and you don't need this to survive and you've got a great job doing whatever the hell, it's no different than going to Las Vegas or somewhere. Just and have fun with it. Who cares? That's what works for you. But if you're looking for this as a business, a sustainably, profitable, consistently profitable, sustainable business over time, then you cannot do that. They don't work together. Those two don't match. And I wish, frankly, that I could be one of those traders that doesn't need anything. There's one guy who I've used as an example more than once named Dakota over on TopStep. He's one of the coaches or whatever they call him. It's just, the sports metaphors there are kind of weird to me. But anyway, young fella from Utah. He trades on TopStep X and doesn't use volume, doesn't use volume profile, doesn't use any kind of session levels or VWAP or anything else. He would do things like, we've had some support right here in this box, we tested here, it's a bounce, we tested up here, and he might draw a thing here and then he might go long if we get above that. He's withdrawn $250,000 in the last few, say 6-7 months in payouts from TopStep. What a pleasure. There's a million, I guess what I'm trying to say here is there's a million different ways to skin a cat. To use an old saying from when I was a kid. No offense to my cats, I can't let them hear me say that, or they won't speak to me for weeks. But you know what I mean. This is what makes sense to me, and this is what I'm going forward with. And if it makes sense to anybody else here, that's really super. The point of the stream, as I said in the pre-market, is this is my virtual journal. Because I don't multitask well. I'm concerned with absolute accountability and transparency. So the stream starts at 8 o'clock every trading day morning and goes until 1500 every trading day afternoon. None of this BS about, I was down a big loser and the next morning suddenly I'm up sick. I got on yesterday afternoon and I made it all back and then some. I used to listen to a guy once in a while named Matt that used to do that all the time and I'd just chuckle. He was entertaining, and at that point I'd listen on my iPad or my phone while I was exercising. But it was obvious what was going on. And I'm really conscious of never having that be a question in anyone's mind. That's why my monitors are shared, not just the application. You can see every program I have open. You can see the hour, minute, and seconds, and the date, and it ties up with the hour and time on Bookmap or in IRT. So, there you go. That's where we are at this moment, and I'm real happy about this backtesting story. If anybody could, is running IRT, I'm happy to share these definitions, no problem at all. If these price levels are of any value to you, the session prices, I share them with a lot of people for years now. They start plotting when I fire up my gear Sunday night at 1700, and they run nonstop through till 1600 on Friday. Just drop something in the chat. I'll be happy to hook you up with a link, and there you go. You can use them in Bookmap or wherever. It's pushed out of a Google something or another, Google Drive, with as a CSV. Now internally, obviously my IRT pushes internally to this monitor over here. The one I share, the only way I could figure out to do it was using the Google thing. So, and it's worked pretty good for lots of people. I have no idea how many people use it because I've openly shared the link a number of times on TLab or wherever else. So, and I still get questions about can you do this or that or something else, and I push both the NASDAQ Mini and Micro, I think it is. So if any of that stuff would help you, let me know. I'm getting off to 31C here so far today, which is about 87 for all you effers out there. Boy, I'm happy about that backtest, and I can't even start to tell you what a pain in the ass that was. Took me, and it wasn't a problem with my conception of what I wanted to do with the rules. It was a problem of my syntax in actually coding the RTL. I was just not getting the rules written properly to do what I needed to do, and I haven't found a basic primer, if then else statements, stuff like that. How many brackets do you use? Do you have a semicolon at the end of each line? How many, can you use multi-lines of and then, and set then, and that kind of silly shit, having nothing to do with what I really wanted to accomplish, which is the first rule is when the IB statistic is taken, and the second rule is when it's within the pullback zone, and the third rule is when it's within the the trade back to within a point of IB. Those things are fine. And look at us go, another 10 points. You see, if you were running that out now, you'd be up. You'd be looking at another 10 points over the original TP2, take profit 2, T2, if you were just trailing them. So that's how you can really compound your accounts. Never accept less than right now the basic 2-lot risk neutral package is a risk reward is 1 to 2.5. And I could change that, but I can't until this vetting process is completely in the bag, because then all the trades with the change would be not part of the same sub data set and useless. It's frustrating. That's why I'm so happy about this freaking backtest. Really happy. It's going to make my life a whole lot easier, mine and a bunch of other people, I suppose. I'm already getting questions. Okay, now, can you do it with you just have, eliminate the T1, just have both the T2, and stuff, all that kind of stuff. People are already starting to think, as am I. So I'm pretty tickled about this. I am pretty disappointed about the fact that we're up here at 20 points now. Look at there. Ooh. What a beautiful classic IB continuation without so much as a whisker, even a red whisker of heat. Wow. Wow, wow, wow. Ooh, I don't know what this says for the market in general, this irrational exuberance. This gotta, stop. And I lost a shitload of money by cashing out my 401k because I was afraid I was afraid about the circumstances around the market being so toppy and the Fed rate decision. So I closed that out and put it into didn't do something else with it. But had I let it run another week and a half, it would have been up a bunch more, right? It sucks. But that's the way, that's always the case when you win. And that's something else on my rants and raves about monkey mind and things. One of the facilities, besides being able to spot patterns by just making them up in our mind's eye, humans don't remember the negative stuff. One of the biggest problems, I think, to development as a trader is when, for example, I've just got through ranting and raving about never move your stop away from your entry. One of the most deleterious things that can possibly happen to you as a trader is when you do move your stop away from entry and it works. Because then your mind is going, oh, what is this guy talking about? Yeah, hell, do it. Move it away. It worked last time. Let's go. Hey, And believe me, that's not the right approach. But that's the trap that a lot of people fall into. That and another one, while we're talking. When you're in the process of vetting your trades, it's so important to be outside the range of random distribution. I know I said something about this earlier, and here's an additional reason why. You may have the most fantastically profitable setup ever figured in the history of trading. You look backtest over a small sample data set, and that, for whatever reason, the gods are mad, or whatever it is, that small data set of backtesting has within it a random distribution of losses, which is absolutely normal in trading, and everybody knows it. But you'll look at that and go, holy shit, I don't want to ever try trading this. This thing is nothing but a loser. It may be the most profitable strategy in all time history, but you just happen to look at it in a small micro window where those trades were in a random distribution that turned out that were negative. Really important. And it's kind of depressing to me. Well, I can do it now that I'm backtesting with the computerized. But when you're trying to just go back manually and do it, I figure 100 trades is about minimum that you ought to go. Most people that are professional, quant guys and all that stuff say anything less than 1,000 trades, and you're in the possibility of random distribution. Well, that, that's pretty disappointing, even if you say it fast, isn't it? If you don't have the facility to backtest and do all of those things, you can do something like I've done here, and I've, depending on whatever kind of charting you use, most all of them have some facility to do this. First, I first recommend use a bar chart, because it's much cleaner to read in a situation like this than a candlestick, for me. And then throw the visual references on the chart as indicators, so it's plain as the nose on your face when something happens that's within your whatever you're trying to backtest, whatever it might be. And that's what I've done here. I know that my rules are 1, I need the IB high and low. I know that 2, I need the pullback zone. And I know that 3, I need the retrade or whatever to within 1 point either side of the IB low or high. So I put those indicators on here, and I have them all start at 9:30. Because if I see something over here is meaningless, it's not part of the IB continuation, IB trades, as an example. You can do VPOC migration, you can do mean reversion, you can do every time the POC migrates outside the IB. I mean, there's 1,000 different ways, setups you can think about. But this kind of a thing makes it quicker for your scrolling backwards, right? If you have something with these lines on it and you're scrolling back, well, you can just see, that's out of the question. You can go to the next one, rather than trying to figure out where all this kind of crap is. That for me is a problem. So I did this. That might be something that could help you out. If you're doing this manually, backtesting. And if you're using IRT, another thing I did was created this quick quote page up here that's got all the V-pound variable number that I set with the code, so I can see if they're setting the right values. And these are the flags, which happen 0, 2, 4, 6. You have to have 1, or you have to have 0. That flag has to be, that's rule number 1. Well, if that's still 0 and not 1, you're never going to get to 2 because of the way the rules are written. So that's, just simple stuff like that can help, I think. And if you've got IRT and you want me to share this chart or these rules, this trading setup, no problem. I don't think that the few number of people that I could share this with and perhaps help could have any impact on the success or failure of that trade. You know what I mean? That's the big, they're going to arb that out. But I can't tell anybody my setup, because then it's going to just ruin the edge. What kind of a narcissistic attitude is that your little 1 or 2 points or 5 contracts is going to make a difference in the market? It's just ridiculous. In my opinion. Remember that this is all my opinion. So, there you have it. That's why I don't mind sharing any of this stuff. I think it's perfectly fine. I'm not worried about it. Maybe I'm wrong. Who knows? Well, look at this. I'll tell you one thing I'm wrong. I'll tell you one thing I'm not wrong about is context is king. Now, if you had to just look at this trade today, what would you think the context was? Which direction you think you should be trading? Here's a very well-known setup, the VPOC migration. This is the VPOC, the volume point of control. This yellow line, just as it is a yellow line over here on IB. I try to make them the same on Bookmap as the same colors and stuff for my old mind to remember. Well, the concept behind the VPOC migration is, the logic is, The definition of the point of control is the price at which the most contracts have traded so far in the session. What does that mean? That means to me, that's the price that the most number of traders thought was okay to trade. Fair value, retail, whatever, pick a name, whatever name resonates with you and that you like. So if that accepted retail price migrates up, and then there's volume, what does that tell you? Well, they're accepting higher prices. What is it likely for price to do? Continue going higher. VPOC migration, get long. Ooh, what happened? Get long. Ooh, what happened? Now, I'll say straight up front that the VPOC migration is probably the worst trade I have tried to vet, and I haven't tried to vet it as methodically as I have done, and am just concluding now the IB trades, but trades that I've taken. And here's exactly why. If you try to, here's a VPOC migration right at the open. Not a good idea to trade anything right at the open, but anyway, you're stopped out. Here's a VPOC migration at a little before 9. Damn near stopped out. It's not the setup, because that's as obvious as the nose on your face, right? How can you possibly miss that yellow line moving around? What's the key, as with any setup, are the qualifying parameters and potentially the trigger. Then you very specifically determine what you think those are, and then you backtest them without emotion, without change, exactly the same. That's why, in my opinion, backtesting with a computer, with coded backtesting like this, is hugely beneficial, because there's no freaking way my discretion is going to get in the way of any of this. It's impossible. It's a computer code. There's not rule 2 that says, ask Boomer what to do next. You know what I mean? So, there you go. And I'm excited to get on with that. And I will share all of those results and outcomes here, no problem. Here's one I shared with the Static boys over the weekend. This was a 493-day backtest of the IB high failure. So that's before I added the two together. What does that mean? That means that's this trade. We trade up, we fail the IB, and we come back down. These are all IB failures. So that's all. You test the IB on one side, then you do some rules, and then you come back into the middle. In other words, mean reversion. And it's only for the high side. Hey, buddy. Hold on, I got to do something with Lucky. Hey, buddy. All right, where was I? All right, so we got the one I shared, and here's the idea. It's a 500-day back test. The ratio of wins to losses is 2.29, so that's the win rate. And here's the percent profitable. And there's the number of trades. So out of a total number of trades of 191, 82 were profitable. 51 were not. This I put down here, calculated and typed in myself. 140 of 191 is 73%, T1. T2 is 42%. That's the total winning percentage of both winners. Total stops is 30%. I mean, scale, in other words, where we scratch, is 30%, and full stop was 26%. Those are real statistics for a real back test. What was the largest losing trade? It was $300. Largest winning trade in this case was $900 over 500 days. Just for the IB high failure. One of 4 IB trades. Remember that there are 2 ways to trade the IB. Continuation or failure. Same with the IB low. Continuation or failure. That back test that we were just looking at is only for the IB high failure. So there you go. And I'll share those similarly here, but I encourage you to do your own back testing. However, I believe, and I've not ever done it, I believe that, now if I can think of the name, TradingView has a pretty good backtesting capability. I've never used it, and I don't know that, but I was told by someone that they did. I know I've used iInvestor, RT. Jesus, I think I first started. This is the program that I started learning market profile on, and that was in about 2013 or 14. Now, I haven't been trading 100%, 12 hours a day, like I do now on this. Absolutely not. But I've been knocking around with it for a while, so, There you go. And, okay, that's about all I can say about backtesting, I think. Let's see where we are for volumes here. Just kind of be normal now for a while. Well, the volume's picking up. We were down in the 60s, if you recall. And ATR has dropped down, so they've gotten a little less excited about what they were doing. You'd never know that. You'd never know that by looking at this freaking chart, would you? Look at this Renko chart. Wowie, wowie. That's about a one-way train, isn't it? Imagine all the dorks that were picking this top. Oh boy, can you imagine how many people got short right there? And then and here's what we're looking at, right? Yeah, and I am so, what are the odds? I stand here, basically I start a little before 6 in the morning, and now that I'm doing the backtesting stuff, I'm quitting around 10 o'clock, 2200, something like that at night. And weekends. Not that many hours on the weekends because I do other things, mow on and go for a 12-mile deal on Icon or, on Sundays, stuff like that. But you get the point. What are the odds that and my favorite, most successful backtesting trade of the IBs is the continuation trade. And I need one more trade to be over the hump. What are the odds that I would have a house load of termite murderers going around and all my office stuff pulled into a pile in the middle of the room so the guy could get behind, and nice guys, all of them, and everything like that. But I picked Monday because it's usually a less opportune trading day, and they were supposed to be here between 10 and 12, which would have been through that first IB period and, everything here for the stream. What are the odds? It's like, okay, my ex-wife is obviously haunting me. Hey, there are no missed opportunities in trading. There is only the next one. Or as Tom B likes to say, I missed that bus, I'm waiting for the next. What are you doing? I'm at the bus stop. I missed that last one, I'm waiting for the next bus. And that is really a truism that is important for you to understand. There is a the market is a never-ending stream of opportunities. I've done a lot of things in my life, traveled, lived out of the United States and around the world most of my adult life. Had a lot of great opportunities. And I have always recognized that trading is without a doubt the best, most phenomenal opportunity that I've ever come across as far as lifestyle it can provide. And, I'm a real believer. I come from a long line of independent, self-employed people. I grew up on cattle and horse ranch, right? So ranchers are independents. And their families before them, etc. And I had my own business a lot of my life. And this is without a doubt provides all that stuff. You can, all the clickbait crap that you see does have an element of truth. That's why it works. You can trade from anywhere. It can provide financial freedom. All of that stuff. It has theoretically no upside. You're not capped by your salary. You don't have a boss. You are your boss. I used to joke, one of the only problems about having your own business is you can't call in sick. So, yeah, I think it's worth the effort, and I am more than happy to share anything that I come up with. And don't, also, if you're listening to this, don't take anything I say as the absolute truth. Maybe what I say is complete bullshit, and you go, that's ridiculous. I don't want to think that way. I want to do this. And that's good too, because it provokes thought. It's like I'm saying, I will share everything about the back test that I have, but it's a good thing for you to do your own, because you can then have confidence in it to take the next, to put that trade on, as you should do in accordance with trading as a business of probabilities. Well, I better take a cruise. Look at him go again. Man, I am so... Every time I look at this, I get mad at myself. And another thing that's, while I'm on there just talking here, I guess. I have now pretty much vetted the IB highs and lows, the IB trades, as far as I'm concerned. Or will have by the end of the week, say. So that will be 4 trade possibilities in my trade plan that I have vetted. While we're talking about the VPOC migration, okay, let's do that one next. The idea here is that you want to have varying opportunities that you can apply in varying market conditions. Like I said a few minutes ago, I picked the IB trades because there are 2, and they support both market types, rotational and directional. Now, I said there's 4 because you have 2 opportunities. You've got the IB highs, you've got the IB lows, right? So you can go, but you can go either way, continuation or failure on either. So there's 2 trades in your trade plan that you vetted. There's all kinds of them. There's all kinds of stuff that people swear by. I mean, a bar trade, which I have a hard time with. And a fellow posted a real nice report about his bar trades and this and this and this, but he left out the criteria, which is the most important part. Bar trade being breakout and retest. Let's say this is your bar trade. This is your bar. This is your consolidation. You broke out, retest. I guess that would be it. Now, what I would like to find out from him, and the first thoughts that enter my mind is, okay, if I find this exact situation and I'm in a VPOC migration kind of a day, context is up kind of a day, my anticipation for the breakout trade would be some sort of a signal or trigger to go long. It wouldn't be to go short, because that is counter everything else that I think is important. Just thinking out loud here. I better roam around the house and make sure I haven't got dead cats laying somewhere. I gotta go out and check on Bear, my big bear cat. Well, they just can't get enough of that up, can they? All right, so I guess that's everything seems to be okie dokie. Now this is a perfect example of when it's important to be aware of your monkey mind. This is a classic example, so I'll put it out there. I've talked quite a lot and shown here in the course of the morning about the IB continuation trade, and what a beauty it was. One of the two trades that I have been working on vetting for some time now. Jesus, I can't get over this phone. Okie dokie. What the hell was I even saying now? Oh, yeah. He said, wonder what'll happen next. So, fantastic IB continuation trade with no heat and on, ad nauseum. Which I was not able to do because I was busy shepherding termite, moving my office stuff around so the termite exterminator squad that showed up this morning could do their job. Which brings up a perfect monkey mind opportunity for FOMO or regretmo, or I don't know what you call it, but I didn't get this trade. It was a perfect no heat classic setup, which I've gone through a few times here in the stream, so I won't do again. And it's a trade that I'm, with this one more trade, I would be over the milestone on all 5 of those accounts. So a lot of reasons to be disappointed or regretful or whatever else, but I'm very aware of those emotions, and there's no damn way I would be looking for some other trade. That's the manifestation of FOMO or your monkey mind that you need to be aware of and not act on. Nope, I'm not at all, Bill. Money bags. You can see when I'm in a trade, there's absolutely no question about it. It's right here on the stream. The quantity, the P&L, the way Bookmap works. If you're not familiar, there's an entry triangle. There's a green line, which is your break-even line. There's a very definite marker and following line for T1 and T2. And stop, and anything you move, any way you move them, it's very, very, very graphic. Let me see if I can see one someplace here. I don't have one, I guess, for a while. Let me try to show you an example so you can know what to look for. Here's a quick example I grabbed off my screen snaps. Where am I? There we go. So here's how the entries are displayed. You can see this is a replay, by the way. You can see the progress bar right there, but this is what I was trying to do. I copy these and replay them for my static record, but here is the entry, the stop, T1, T2, and you see exactly how any movement of any of them, and they very definitely are shown there, down here at the bottom, and also across the process up here. Let me see if the next one has got a mid-trade. Ah, damn it. Mid-trade thing for you there. What the hell happened? No. Now I gotta do something here. Okay. What was I doing now? Oh, yeah, the library. There we go. Yeah, here's that same. Here's the way the trade progresses. Here, the position is 1 short still. Going to buy 2, sell, volume of 3, and there was the ticks. That was after the first profit target had been achieved, but not the second yet. So there's no question about it on my book map as to whether I'm in or whether I'm out of a trade or anything about it. It's all right there. And then at the bottom, if I were in it, if I had the total and there's another way you can capture all the data also at the bottom, but yeah, it's very clear. The graphics are very clear, and I always keep them on. I don't even know if you can turn them off, to be honest with you. Maybe you can, but why would you? I don't know. No, definitely not today, and I am pretty disappointed about it. That's what I was just talking about. Pretty disappointed. But a good reason to not be in FOMO. A good reason to be aware of your monkey mind. There'd be no possibility for me, I mean, a highly unlikely possibility for me to be in a trade today now, because I'm only taking the 2 IB trades until I finish this vetting process, which I've been talking about ad nauseum. And, you know, how random do you think it's going to be for us to get back down here again? Not very likely, I guess, huh? Can't believe how fast the day is going. It's already 1 o'clock. Holy crap. Well, we are in a 12-to-1 stat situation. And what that says is the following. If the market is out of balance, and it is, if we put in a new high or low between 12 and 1, and we did, there's a high probability, I won't quote a number, but that we will exceed this high or low at some point in the balance of the RTH trading session. So it's essentially like the IB statistic, only it is not defined and well defined and captured in the statistics study. But that's what the stat is. That's how the stat goes specifically. just carrying a little further discussion about this VPOC migration trade because it continues to migrate. Let's just think about it here for a minute. This first one I would never take. This one. 17 would have been fine. No heat, essentially. This one, depending on where you got in, you're stopped out right here. Right? Let's say, let's just take the VPOC as the trigger. Now, wait a minute. You see this darker yellow color? More muted yellow? That's the overnight volume point of control, or the full session. The brighter yellow here is the RTH. Often they're, exactly alike as they are here. And then this one goes up first and this one follows. They're the same. Now they both go up together. But if we just took this VPOC migration here as the entry, that's 32.75. 29.75, you're stopped out. So right here, you're stopped out across the board. How about up here? 47.5. Well, that's a little spooky, but you're within 2 ticks of a stop out right here. I'll tell you, that is a hard statistic to play. I don't know what to think about it. Or you do like I've coded up the IBs, where you do the pullback, retest within a point or something, and then go on. I don't know. That'll be one of the ones I'll try to vet because it'll be a challenge. It's been one of the least it's had the lowest probability of success. Well, we're slowing down now, running out of gas up here at 86% volume compared to average for this time of day. And we're now down to 2.5 point ATR on 1 minute. Pretty much no question about the context, I would hope. If you've got a question about what the context for the day is, you need to really think about it a little bit. This is the full session of the my higher time frame micro composite chart. Look at this day. Now, this was similar. This is where it closed. You know, this day could end up whatever. Could end up a doji just like this one. This was the Fed rate day here. It's not over till the yeah, so here we are. Consistent VPOC migration following up the context, which is no surprise. Remember the definition of the VPOC. Simply the price at which the most contracts have traded so far in the session. So, down here, that was it. Up here, that's where they were. Up here, what are they doing? Well, the VPOC migration is migrating higher. Yeah, this is okay. Let's trade here. Well, I think we ought to trade up here. This looks fair. No, how about up here? Okay. Their consensus is going up on a fair place to trade. What does that mean exactly? Don't know. You need to remember one thing that's, I think, really important. Trading is a zero-sum game. Trading futures. What does that mean? Well, that's why they call it, in futures, that's why it's called a contract. It's not called stock, it's not called a share, it's called a contract. And that's because it is a contract between a buyer and a seller. What does that mean? It means it takes one of each. So for every buyer, there's a seller. For every contract traded down, for every seller, there's a buyer. A couple of things are important. If you ever hear somebody saying, well, price went down because there was more buyers than sellers, just laugh and walk away, because they obviously don't know their ass from third base. The way price goes up or price comes down is aggression. These are resting orders. This is liquidity. If this seller gets aggressive and comes across the inside and hits the bid, price is going down. These are going to reduce and price is going to go down. If this guy comes across the bid with 130 contracts, he's going to take this price out and they're going to be down here. If this guy comes across the inside market and takes this one out for 200 contracts, price is going to be up here, because he took out the resting liquidity or the available liquidity at that level. That is really and truly all there is to the way the price moves up and down. Absolutely impossible that there would be more buyers than sellers, or sellers than buyers. Now, that should mean something if you think about it for a minute. You know, think about it from your own personal point of view. Let's look over here. Look at these days. What has happened here? And of course, both scenarios have happened in each and every day. But the majority, the delta of what happened in each one of these days is more buyers came across the inside market and hit the ask, lift the ask aggressively. And that's why this happened. So for all of these guys that are buying these these contracts, there's been somebody on the other side of every one of those trades selling it to them. What do you suppose that means? How do you suppose the guy that's been selling all this way up here, how's he going to make money? It. How are they going to make money? They're gonna buy back from this guy down here. They're gonna buy back from this guy down here, and on it goes. The market goes up to go down and goes down to go up. And if you don't believe that, look at a higher time frame chart. Well, this is completely nuts, but anyway. Look at this shit. Just look at that. Market goes up to go down, goes down to go up, goes up to go down, goes down to go up, goes up to go down. What is all this? Up, up. All these guys. Now my assumption is, again, looking at it from my point of view, who's got the money? Who's got the depth of pocket to be selling? Let's reload a little bit. Oh, sell. Let's reload. Sell. Oh, sell. Who's got the money to do all that? And who's got the money to get shaken out right? And who doesn't have the money to sustain that from the other side? And who's going to take it out here and here and here and here and here and here when the price goes to here and to here and to here? I think, to me, that seems pretty obvious that the higher time frame, who, you know, if you stop and think about this stream, you go get up from wherever you're trading now, go look in the mirror and say, do you have billions of dollars? Or does that guy, Palantir, you know, Thor, whoever it is, whatever that jerk's name is, Citadel, Blackwell, whatever they're called. Because that's who's taking the other side of all these trades. It's not a conspiracy theory, it's a fact. It's a zero-sum game, zero-sum market, whatever you want to call it. Every time somebody buys, somebody sold to them. Well, let's say you were long up here, and this guy wants to buy, so you sold to him. Now you've taken profit here, and you've taken profit here. Okay, I accept that. What about here? This is an all-time high. Who the hell is... There's nobody that's long up above here to be taking profit here. So they're taking the other side of all these trades with one thought in mind. They're not a charity. They're not altruistic, I don't think. I think they're going to jerk the rug out and the market will come down one way or the other, either real fast, as it often does. This is Trump tariff here. This is pretty, atypical market behavior, but not so far. That's my belief. I don't think it's being conspiratory at all. I think it's being realistic. I think the people that have the most money are the people that can hold these trades for all this way. This up move is basically 300 handles in the ES. And that's how the market works, in my opinion. One other thing that I probably haven't mentioned here, and just kind of clean up, this black volume profile down here is for my entire data set. And so this started plotting. This is the volume profile for the ES. Obviously, it's not the Z, it's a continuous contract because Z didn't exist then. It's the ES continuous contract starting November 18th, 2011. 2021. COVID. That's just about the beginning of COVID right there. That's the profile, market profile, or volume profile for there. This big one, the black one. Naked volume points of control all the way back down, and micro composite VPOCs, which have been unvisited. What's this market been doing, man? Look at that. So that's my story, and I'm sticking to it, yeah. But that's my philosophy, and I think it's accurate. And other people have voiced similar or agreed. And now we're at a new all-time high. More buying. Ooh, let's buy. It's going up. And the market goes up and to the right. A funny thing to do, to notice on the stream here, the coming soon thumbnail that's got the book map and the live trading and risk neutral trading and all that. Take a look at the price ladder here, price index. It's 4,200. It's 4,223, I believe, is the current price on that thumbnail. When I started the stream, 4,200. We're now trading 67.15. That's a couple of thousand points in the ES. It's real hard if you've got deep enough pockets to beat buy and hold. If I'd have bought one contract, well, let's just see what that said. Let's see what that is. Let's do the math. I hate math, but let's do it anyway. Let's go with 67, whatever the hell we're trading, 67.50 minus 42. I think it's 23, but let's call it 25. That's $2,525. Points. Times ticks. That's 10,100 ticks. Times 12 and a half. One contract. $126,250. Buy and hold. One contract on the ES. The time I started the stream, which isn't very long ago. I don't really remember, to be honest with you. I guess could go back and look at when I made that screen snap or that thumbnail, I guess. But, you need to be real conscious of what you're doing. This 1-to-1 risk-reward ratio, it's really, really, really important to understand the importance of the risk-reward ratio long term. Now, I've talked about it a little previously, and the fact that the win rate is just a useless bullshit, clickbait stupidity that, if you fall for it, I guess you deserve it, but internet people do, YouTubers or whatever. Taken by itself, it's completely useless. You can have a 95% win rate and go broke in 10 trades if you have a 1-to-10 risk to reward ratio. That's why risk reward is so important. In the simple little 2-lot risk neutral package, I have a 1 to 2.5 risk reward, or R value, R ratio. And it's real simple to do. You don't have to be a genius to figure it all out. It's just, how much do you risk on a trade and how much do you make? Now, this is not some, I'm going to enter right here and I'm going to put my target 100 points above. It's got to be, it's got to be consistent and realistic. It's got to be real data, not crack, not some stupidity. Anybody can do that. That's also stupid. And that has proven itself out to be the case enough times to be profitable. So that's hugely important. These guys that, try to tell you can do a 1-to-1 ratio and it's great and all that, absolutely not. It's a losing proposition. And frankly, the risk-reward ratio, or the risk-neutral philosophy, should drop away after a while. Other guys that I trade with, we all started the same way with that, have moved to a situation where they don't take that risk-neutral scale anymore because they have enough data and enough experience to take A+ setups only. And rather than have that risk-neutral scale, which takes off essentially half of the potential profit, they move that to T2. So there's just 2 contracts at T2. Okay, and if you are at that level with your trading, you have a large enough account size, and nobody changes the stop. The stop still remains at 3 points. But rather than the risk neutral scale, they roll that up to 12 points. 12 ticks, 48 ticks, as is this T2. Now, that can be extremely, it's obvious that's compounding, has a huge compounding result, input on your trading. But until you've reached that point with, I can't stress enough the importance of the risk neutral trade methodology, because even if the profit isn't such a big deal for you, the psychological factor of being risk neutral, and when the minute you achieve that scale, is huge for most fledgling traders. That eliminates a whole psychological component, fear, all those kinds of things, because the worst that's going to happen to you is a scratch. And so your thinking suddenly clears up and you can start seeing the market more accurately. There's not a bunch of adrenaline zooming around your brain, or fear or panic or whatever else. So it's really important. So I don't talk about that second phase very much, but that's where you can go, A lot to be said for the risk neutral. It's phenomenal, I think, actually, for newer traders. You have to have done the homework and have your vetted setups. You have to have been around the market and on the charts long enough to know which of your setups is A+, and quickly. Context is up. VPOC migration is up. Here comes the IB continuation. Up, I'm going. You know what I mean? Or whichever other setup you have vetted. Maybe the VPOC migration. Maybe it's I'm going to take well, it never does happen, so never mind. There are other setups like the mid VWAP to the VPOC and stuff like that. But anyway, in this context today, it's a perfect example of trading with context and waiting for a well-known vetted setup like the IB continuation trade. Even so, it's huge to have that psychological lift, at least for me, that psychological relief that when you have the scale, the risk neutral scale. I don't have a problem with discipline or over trading or that stuff. It's like, no. I approach it differently, though, than a lot of people, I think. I approach it from a point of view, and thanks for subscribing, by the way, and thumbs up and things like that. I really appreciate that. It's I'm not monetized in any way for this trade, for this stream. It is my virtual journal, but it's rewarding and it's nice. It's great. I appreciate it very much. Very much appreciate it. So what I was going to say about, over trading or discipline or those kind of things. Think about it. Put it in context of your daily life. Where those, you don't have any problem with normal, everyday discipline, self-control. Do you poop? Do you shit your pants? No, you don't. Of course you don't. Well, you don't overtrade either. It's that simple. And I really believe it's that simple. No, I don't overtrade. I just can't control. I just can't stop clicking them out. Well, come on, dude. Of course you can. And I believe it's that simple. I'm not going to take a trade until it's one of the vetted trades. And in this vetting process, I'm not going to have another trade that I can take because I'm doing this specific exercise, period. And that's the way you need to be. If you've ever done anything in your life that has required any kind of discipline or, self-control or discipline, I can't think of anything that doesn't. I can't think of any job that doesn't require some sort of self-control, discipline, self-guidance, self-awareness. I don't know what it could be. So I don't think there should be any question in your mind about things like overtrading. Now, subtle things like FOMO and those kind of things, which I have talked about earlier today and do every day, they can be insidious because they're part of your monkey mind. You need to be on guard, vigilant about them, about recognizing them. You're never going to remove them from your psyche, but you definitely need to be aware of them and then consciously acknowledge that it's happening and not react to it, not act on it. But simple things like, overtrading is particularly one of them. It's like, what the hell? Who's thinking, your brain or your index finger? Come on now. You know as well as I do. That's like saying, oh, I just can't stop touching the hot stove. It's like, really? That's an analogy I hadn't thought about for a while, but that's a good one. Yeah. So anyway, and here we are at the top of the top. We're going to be at 6,800 pretty quick. Or we're going to be back at 4,200 pretty quick. I don't know which. I certainly don't wish. It's just, I don't see, when I listen to all the folks that I listen to who are much more clever and experienced in all things finance than I am, there is absolutely no reason on the planet why this market should be doing this in the face of the economic numbers and situation that we're having here. Except the only thing that keeps coming back in my mind is they are going to get as many retail dorks along. Oh, God, we're going to the moon. We're making it the market great again. Oh, boy. And then, kaboom. That's the part that I worry about. And we fast approach the all-world famous 2 o'clock power hour. Oh boy, oh boy. I'll go through the backtesting idea one more time and kind of how those thoughts work out. Then I typically do a market recap just after we turn the final curve at 1430. Anticipating market on close imbalance orders, which come out at 1450, and the world famous cash close at 1500. Am I pissed that I wasn't able to be focused and here trading for this? Yeah, abso-freaking-lutely. I can't tell you how over this vetting process I am. And especially, think about it from my point of view. I have very methodically, without any blowing up or resetting or any of that crap, taken 5 of these contract accounts right up to within one more trade, and all 5 are over the profit target. Over that milestone. And just one more. I probably, hindsight, woulda, shoulda, coulda, never mind. But yeah, the point I'm trying to make here is, yeah, I would have loved to take this trade and been out of this mess with this whole thing and onto the next stage. Abso-freaking-lutely up one side and down the other. And I intentionally scheduled these termite guys to show up today because Mondays are typically not that robust for trading. They were supposed to be here between 10, closer to 12. My thinking was, okay, the IB will be over with. We'll be into the RTH 2. That should be okay. They showed up before 9, and I could understand completely that they wanted to get the hard work done that they were going to do before the heat kicked in. And I'm certainly not going to say no to that. So I wasn't able to take this trade. I'm not over that milestone. I haven't FOMO'd in. I haven't done any of that this trade, I'm sorry. I haven't FOMO'd in. I'm not going to break my rules. I'm not going to take some other trade that I'm not betting. Simple. I'm not going to drink a bottle of vodka and go drive the car 1,000 miles an hour past the school zone. I'm not going to do any of that stuff. So there you are. That's the way to approach it. And if you approach it from the concept, this is a big help for me, I believe. If you approach it from the concept that The market is a continual stream of opportunities. There is no such thing as a missed opportunity. There's only the next one. And I believe that. I've been looking at these charts and these markets long enough that I absolutely believe that. And it can be on any time frame, like I mentioned a few minutes ago. Just look at the thumbnail on the coming soon or upcoming or scheduled or whatever the hell that YouTube says about the stream tomorrow before it starts, and look at the price ladder. Look at the price scale right here. The current price in that little box is $42.23 quarter, I think. And we just did the math. That'd be $126,000 if you bought a one lot and just forgot about it. Now, do you have enough money to carry a one lot futures contract over through rollout and on and on and on? I don't. But there's a hell of a lot of people that do. That's why that figures into why I believe my theory about who's selling, who's taking the other side of most of these trades. Back to the zero-sum game again. So, there it is. And in 50 seconds, we're going to be in the world famous power hour. I have no idea where that came from, that nickname either, to be honest with you. But I can tell you one thing, here we go. I talked about the 12-to-1 trade, remember that. Oh, look what's happening here. Ooh. 12-to-1 trades coming to pass, coming to fruition. It's like the IB statistic or the IB 30, which is one Rod cooked up. For a statistic like that to be satisfied, it only needs a tick. We've already done it. We just did it again. See what I mean? The statistic says if the market is out of balance, which it is, and we make a new high or low, in this case, a high, between 12 and 1, there's a 90 plus whatever probability that we will exceed that high or low in the balance of the RTH trading session. And there we go. The stats done. Poof. These are not things that are necessarily tradable. The idea, it's kind of like the statistics which I put here every day in the pre-market. So these have been here since 8 o'clock in the morning or 8:15. These statistics are something to give you an idea. They're like road signs or clues or something like that. I don't know good terminology for it, but doesn't mean how far you might exceed this 12-to-1 high. But if you're in that configuration, I guess you better think twice about shorting a mother, for example, because it's a high probability that it will go higher at some point. And this one is a little bit better than the IB because it's from 1 to 3, right? The initial balance statistic says that the high or low of the first 1 hour will be exceeded by price in the balance of the trading session. So you've got 6 hours. Think about that one. From my point of view, the simplest, the best place to start discipline and common sense is context. Figure out some way to keep context in view and a sense of scale, which I've been babbling here and have let get out of hand. It's tough when it's moving so much. It's hard to keep the scale right. Typically, you see, I like to have 1 point scale on this price ladder. But in order to keep the entire range in view and keep 1 point scale, I'm running out of room. Which should tell you something. Does me. But these are important things to keep, for me, to keep at the forefront of my mind, to keep my perspective clear. Okay, the power hour. Oh boy, oh boy. And up we go some more, huh? Now we're a whole point above that 12-to-1 high. And this is just sickening, isn't it? I mean, even though I know very well and have no, that I know myself very well, there's no way I'm going to try to FOMO into something. But boy, it is a pisser when you look back and you've been waiting for this, talking about it, and not standing here when it happens. Wow. And I don't chase them, and I don't do any of that thing, any of those things. So, yeah. Smack the like, the subscribe. Drop something in the chat there. Let us know you're alive, who you are. Richard's here. BS Bags is here. Money Bags. I don't see Antonio today. Hopefully he's enjoying himself in sunny South Portugal there somewhere. I guess it's South Portugal where he is. I'm not really sure, to be honest about it. I know Portugal, but I don't know, south, northeast. Okay, let's take a little drive around the park here and look at the backtest story a little bit. What's our volume? First of all. And not making any super headway. Ooh, boy, the ATR fell off the truck, didn't it? Well, backtesting. Oh, I know what. What happened with the damn... Oh, it got left in the dust, didn't it? Yeah, the expected move. Yeah, so much for that. I don't know whether that means anything or not. Like I said in the pre-market, that expected move thing that I have here on my charting, these are computed lines or levels, which I put in every evening right after on the first candle open of the RTH Open. And they're computed off against the expected move on the S&P, the SPX underlined for the next, basically at the money strike. I thought I kind of knew what they were supposed to do, but I really don't. It's an options thing, and somebody was using these, and I heard them talking, or mentioned them, and I thought that'd be interesting. So I've been doing this for a while, and I really can't see any benefit to it. As I understand them, the expected move is supposed to be represent one standard deviation either side of a, n number, which is, I guess, the open in the ETH, and that should typically contain the market, just like the IB does. And sometimes twice the IB is a big. There's actually statistics about that in our study. Let's look at that. These are the 4 open types. I've told you all about that, so I'm not going to do it again. So here's 1.5 times the IB high. It's 41.6%, and we're at least that much now. Two times the IB high and low, So, anyway, you get the point. I don't know whether they are valuable or not. I plot them over here too, every day. Come on, just to kind of see what looks like happening. Gets the hell out of me. Let's look at the back test. So, quite obviously, the IB failure isn't going to be a very fun idea here today, is it? IB continuation would be super, though, depending on how you configure it. Today. Why do I think that? Well, like I said before, I hope you were around to know. These lines are just custom indicators that I've put on this chart for my own visual reference, so I can say, oh yeah, okay, that did this, and basically to verify the rules for this code that I just did on the IB failure. What these lines represent are the IB high, 1 point on either side of it, the pullback zone, which is part of the criteria for the IB failure. That represents 3 points below the IB high and 5 points below the IB high. And then the first rule is the initial balance. And the same goes for the below. So what would we see here? Well, here is the IB high, the IB statistic as I have coded it, which says that we come up from the bottom, talking about the IB high, coming up from the bottom. Well, they still keep going. Look at them go. And then the open is below the IB and the close is above it. So that bar right there would be the signal bar. Now, I have not coded the IB continuation with these sequential rules, but that'll be next. In the case of the IB failure would be, here's the first rule signal bar. There's rule 1. Price would pull back down into the pullback zone. That's rule 2. And then price would trade back up to and close within this bracketed area. 1 point either side of the IB high. And that would be the trigger for an IB short up here. That's how it goes. Let's see what just out of curiosity. Ooh, look at them go. Ooh, look at them go. So if you're all excited about the 12-to-1 stat, I have no clue how to trade that, so I'm not even looking at it. Let's look at one trade, an old one, which is the IB continuation. There'll be a new one of these here pretty quick. These are the rules. Diddly-doo-doo-doo. Let's set up the back test for one day. Let's just call it today. See if we got that trade. Yep. I got the trade to a full T2. One trade, 4 contracts. There's the net profit. That would be exactly right. We'll lose this. Get over here. Come on. There's no stop. Maximum winning trade is 750, and that happens to be correct because IRT, I have not figured out how to use ticks. I would prefer that, but it does it in dollars. So I happen to know that the 2-lot risk neutral package, as I have it coded on and use it in Bookmap, if I take both profit targets, that is $750, which is 60. You can do the math. It's 60 ticks times 1250. There you go. Okay, and now let's look at that trade and see if it fits, how it fits our little roly-woolies over here. See if I can do this all on one screen. Yeah. Let's see if I can do this all on one screen here. We'll get down here. Get down to the trades. The trade, which is right there. We can zoom this up a little bit. Come on, man. Okay, here's our trade. 22nd, that's today at 9:37. We entered an IBC long with 2 contracts at 67 quarter half. At 9:41, we achieved our T1 risk neutral scale. $1.50. At 10:02, we achieved our T2. Now, there's a couple things you can do. You can look at these and see, because now these rules don't do as I said, the rules. So let's look at when that is. 9:37, that's over here probably. 36, 37, okay. Well, you can look at the time up here and you can look at the levels over here. So here's 9:37. We get long. Nothing happens in the pullback. 9:41, guessing right there. That's when we take the T1. And what is it? 10:02. Up here somewhere. Oh, come on. Oh, wow, maybe right there. 10:02. There's our T2. Wow, almost to the perfect. Almost perfect. Look at that. Now there's another way you can do this. This is how I try to analyze them myself. There's another way you can do it, which is to send this rule to the chart. And you do that like this. Now it's going to ask me a couple stupid questions. I'm going to say yes. There you go. There's our entry. There's our T1 bar. And there's our T2 bar. There you go. Just what we figured out. The trick to these is, I don't want to leave those on because it'll keep, I was surprised the other day I had not taken this off. And this is just back testing, it's not going anywhere. And I know I'd done some work on the weekend or whatever, and I came back in the end of the Monday, I guess it must have been last week. And there were trades in the current day. straight. It was fun. I was real glad I hadn't been sending it somewhere important to the brokerage. So let's do the this is both sides of that market. This would be that double action with the thing that I've been. And the way you can do it on a bigger scale is you can set these back tests up for, 50 days, 100 days, 500 days like I did the other one. And there you are. That's how long it took to do that. 550 days. 34 trades, 16 long, 18 short. Not very much money, $6,000. And this is good, 300. This is not right. Should not be greater than 750. And I think I know what it is. It's adjusted the price. We'll go see. And here is our trades. Here are our trades. That is. Come on, oh, that's the wrong one. Oops. Sorry about that. So here they are. There's all the trades for 50 days going back to July 16th. Very nicely, succinctly, and orderly laid out. There's your complete backtest to verify if you don't trust it. To verify your the results. I don't see what I'm looking for. There it is. Right here. This problem right here, and I know that exists, and I'm not sure why, and I'm trying to figure it out. That's why we have $1,050 for the highest trade. It should only be $750. I've got to find out why that's happening. I think I know. I think it's a half day. But, there you go. That's the way to backtest. Now, I was able to backtest. That's the IB trades, long or short. Failure. I will do the same exercise for the IB continuation trade with the same rules. Well, different rules, but you know what I mean. Sequential rules. And then I'll be able to backtest it just as fast as this. Took a second, basically. Rather than standing here doing all this drama for weeks over here. Or doing it the other way that some guys do, which is whether they put these lines on their chart or not, then they scroll back through and see if it's meeting its criteria, and then have an Excel sheet where they note that down or whatever it is they do. I don't know. Painful, I can tell you that much. I've tried all different ways. I've also tried teaching myself Python and coding it all up. I got to the point where I had all the risk management stuff, enter 2 contracts, scale out on 1, then T2, then stop, and all those things. And I was kind of getting narrowed down on building the rules and the trade management stuff. And I kept wondering why the reports were all off. Those Python backtesting, whatever they call them, environments or scripts, I forget what the word is they use in Python, cannot deal with futures, in that they cannot deal with the point and tick idea and value per tick. It's built for crypto or stocks or whatever, it goes in penny or less increments. And I actually pinged the guy over at GitHub or whatever it's called there, the that had coded up the backtest.py, and he said, yeah, it doesn't work with futures. And maybe there are others, but I am not interested in becoming a fantastic Python coder. It would be great, right? But that's not my goal. And I'm subject to going down rabbit holes real quick. So I'm trying to stick with this thing that I know something about, and what I want is the results. So there you go. Now you know as much as I do about that. And here we go. We're getting ready to round that final curve. I'll do the recap. And then I will we'll watch for the market on closing balance orders and shut her down at the top of the hour. The 12-to-1 beauty's working out, huh? Maybe. As with any of these things, and I'm pretty sure I mentioned this earlier, what is got to be foremost in your mind, risk reward, right? And where are you going here? Your goal is absolutely, if you adopt this methodology of risk neutral trading, which is great, I hope so for your sake. The risk neutral scratch or scale is not your job. That's not your target. That's not the target. That's not the objective. That's a big help. But your objective is the profit target. So there's that. Find that to be real limiting in a lot of cases, especially when it's in a mean reversion kind of thing, because where the hell are you going? You know? My risk neutral 2-lot trade package, as you know, is 12. This T2 is 12 points, 48 ticks. Well, if that's not within, if you're looking at a mean reversion day and that's outside the entire range from wherever you might enter, how probable is that? Is that an A+ trade? I don't know. This is pretty interesting here. Boy, they are really excited to get this mess up there even higher. Really crazy. Look at that. What the hell are we here? 31.56. 25 handles above the previous RTH high, all-time high yesterday. Wow. We're going to round the curve here pretty quick, boys and girls, campers. I'm tired. I'll admit. I'm ready for a nap. I gotta now it's my turn to be the bus driver to make the school run. Pretty quick. 5. Okay, here we go. The final curve, huh? So we got started off with a bang here. Not much question about what that market is doing today, is there? Never looking back. Here's the micro composite, which is the RTH session chart, daily candlesticks. That automatically generates then a micro composite VPOC, and these red and green lines represent the high and low volume nodes of the micro composite volume profile, and those values push to bookmap. Session prices push to bookmap. And here's our market profile. NASDAQ following along like a good little boy, girl, or person, or it, or whatever. About 800,000 contracts and 0.48% positive change. Not so hot. Wrong button, there we go. 83% average volume for this time of day, and the ATR is falling off the map, not going anyplace. Struggling to get any higher, huh? But boy, oh boy, is that ever obvious? What a day, huh? What a day. As far as the news, the snooze goes, this is my favorite. Used it for years, investing.com. I like it because it was nothing today, but I like it because it's real clear, easy to screen snap. Let's look at tomorrow. We've got the PMI, both services and manufacturing, PMI. Fed Chair Powell is speaking at 11:35. That might be something to be careful about. I noticed, I think Trump or somebody's doing some sort of a hootenanny tomorrow also. Oh yeah. This also does earnings and everything much better, I believe. And this is free. Financial Juice is the other news thing I do. It is also free. Got the same sort of a calendar idea. There's the calendar here. And it has more of a squawk box feel on the right side over here. Wow. This is pretty amazing. Wow, wow, wow. I don't know what to say about where we're going here. I don't think it's anywhere good. So that's what we have to look forward to tomorrow. I thought sure there was some deal. Oh, I know what it was. Somewhere in that news feed, news conference thing she was talking about. Somebody, Trump was going to have some speech tomorrow. Look at this little sewer rat. Okay. We'll get our market on close orders in here in a little bit at the 50. What would we expect for tomorrow? Well, it's more of the same, I guess. I don't know what to think. I know that I'll be back online at 0800 in the morning with another pre-market. And it's about all I can say. I don't know. So we're $1 high and session wide. No doubt about what this context has been today, is there? I have no idea why this is going on. I don't know what the bonds are doing. I don't know what, something's going on that's making this market move. Apart from just, having everything tip over, I guess. Maybe that's it. Another 10 minutes for the market on close. And then I'll be winding up at I'm seeing different things. I just realized. Okay, now I see it. Well, it's a pretty awesome day straight up. I mean, if you got long, if you took that IB continuation trade and didn't, and just kept moving your target out and trailing up behind the swing lows, you're 25, 30 handles high. So that would be definitely something you missed. That would certainly have been a nice miss. Nice thing not to have missed. Put it that way. I'm looking forward to a little calm tomorrow here, I guess. Hopefully everything will be all right. I'm not sure what's going on with all of this weirdness in what to make of the government store things, I don't understand. What's all new ground for me. And it all impacts the the economy, and obviously the economy impacts well, good for you. Yeah, I understand. And obviously, as the old saying goes, life's what happens while you're making other plans, right? Oh, there you go. And remember that the market is a continual stream of opportunities. There is no such thing as a missed opportunity. There is only the next one. And all you've got to do, I have any idea about your goals or what you're trying to accomplish, but one of these 2-lot risk-neutral trade setups to both targets is 60 ticks. If you run that out into dollars, that's $750. That's a nice bump on your day, I would guess. Maybe not. Maybe it's jump change for you. I don't know, but you know what I mean. That's I try to keep everything grounded and not be thinking about gold chains or wrap Ferraris. Why this day is doing this, I have no idea. Unless it's a holdover from the... Maybe this has got to do with repositioning on the rollover. Not the rollover, but the triple witching. I don't understand enough about that. I've got to get... Yeah, if you've got some... Yeah, I think it would be for anybody. I think there's like 220 days, trading days or something in a year. If you figure 80% of that, well, let's see. What is all that? I don't know. I don't think about it much, but let's say it's 220, I think. It's 132 grand. And with futures, of course, it's taxed at a much more advantageous rate. It's taxed like long-term capital gain, I think, rather than a regular income, not capital gains. And so it's much more tax advantageous than stocks or options. So that's something else to figure in there. Where are we? 44. Okay, 6 minutes to market on close. I think I've pretty well gone around the horn and the wrap up. I was kind of MIA there for a while, just at the most opportune time right here. And I'll be, you can bet, pissed about that on into the night. But hey, it happens, right? And we have to take care of what we have to take care of. So there you go. Yeah, so I appreciate everybody dropping by and and contributing in the chat. It's nice to have somebody to talk to. Feel like you're, as I said earlier this morning, trading is a solitary endeavor by nature. I would suppose, I have not ever done this, but I would suppose there's a great benefit to trading on a prop desk or a regular trading desk, an official, where there's support people and fellow traders and things like that. I would suppose that would be a really good environment, like SMB Capital or someplace. Never done that, but I would think so. Just simply because it's a, yeah, Richard, take care of yourself, man. See you tomorrow. I'm glad your trip went well, and I'm glad you picked one hell of a good week to be gone, or 2 weeks. But yeah, have a good one. I hope your trip went really well. Four minutes, 3.5 till this market on close. Drama unfolds. And what it all means, nobody knows. I don't understand these kind of headlines, It seems like we're getting into a situation where people are guilty because one guy says so rather than due process or, all of those things. I don't understand how. I don't know. Don't understand, I guess, is the best way to say it. The best thing to say. So we're waiting for the market on close orders. Interesting that what's her bucket, that little news person said that what's her name? Ms. Levitt said that that Trump would be making a big speech tomorrow. I don't see anything about it anywhere. Oh, here we go. No, this is today. I don't see it. I guess they don't have it pulled into the docket here yet. And also, Chair Powell is speaking tomorrow. So who knows, man? We've got about a minute and a half or minute or so to go for the market on close imbalance. Wow, what a damn day. If you got long anywhere along the road down here, you were a happy camper. Yeah, it's pretty crazy, isn't it? More, I haven't really read anything, or I didn't even really know who that Charlie Kirk was, other than a few things I saw he said seemed pretty radical, to me. But anyway, it's certainly horrible that anybody shoots anybody else. But at least the couple of things I've seen, that kid, 200 and something yard shot with an old World War II rifle, no scope. Wow. I don't know if you've ever hunted or shot a gun much, but that's, oh, wow, Richard, how cool. Oh, sweet. That's really nice. Well, now I'm pissed. I don't ever talk to you again. That's really great. Wow. Must have been beautiful and great weather. Good for you. Congratulations. That's super. Actually, Antonio and I questioned whether you had gone on your road trip just within the UK, or whether you slipped under the channel there and got into over on the continent. So that's really cool to know. I've never been up north like that. I've spent all of my time along the equator pretty much. Lived most of my life out of the country here, but most of it along the equator. I did get to France a time or two, and on the way to Switzerland once, just to fly in, spend the night, and deliver some parts and leave. But I didn't really get to see the place at all, and I've always been kind of disappointed about that. Been to UK a few times, of course. But all of it to do with work, pretty much. Well, the 12-to-1 trade continues to go. Oh, Trump's announcement about medical is about autism. It says here. Are you watching this? Oh, okay. This was that news at 3, which is pretty vague. But apparently I guess that's what this is. And there we go. So there's our market on imbalance. Market on close imbalance orders. You read these as follows. S&P 500 is buy side 1,070 million contracts. NASDAQ 100. Buy side 1,106 million. Dow 30 minus 133 million, and the Mag 7 plus 492 million. Imagine, and this is what I was trying to allude to earlier about how we think we're important, and I'm not going to share what I do with you guys because you're going to ruin my edge. 1,106 million contract imbalance, buy side imbalance, market on close orders. Do the math. Do the math. How much 1,106 million ES contracts or NASDAQ contracts are even ES, 1,070,000,000 at $12.50 a tick. Yeah, baby. That's the money. Oh, really? Plus taxes, huh? I'll be down. Cool. Well, pretty quick the way this administration's going, American passport won't be worth wiping your butt with as far as travel goes. And I can't blame anybody, you know. I was kind of looking forward to going to that island full of penguins, but I guess they're pissed now. We can't even go there probably. Christian, what is the name of those two islands they put tariffs on two islands populated exclusively by nobody but penguins? Yeah. Makes you wonder. So, basically 5 big ones, 5 minutes to the top of the hour. I will sign the stream off as normal at about 1500, and then I'll be back with bells on at that was hilarious, wasn't it? Jesus Christ. And some shrewd fella figured out that none of those numbers on that, poster board that he held up there, and the where they got those numbers from, had to do with the trade balance. It wasn't anything about tariffs or anything else. Yeah, tourism is way off in the States. The economy's heading into the shitter over here at Mach 1,000,000, I think. But yeah. Nobody wants to believe that, I guess. The numbers, remember the non-farm payroll month before last, the numbers were terrible. And so the answer was to fire the head of the Bureau of Labor Statistics, BLS. Well, and then put in their own guy, some guy whose name I don't even have any idea about. And the numbers came out last month this month, I'm sorry, a little bit worse than the month before. Maybe it wasn't fake news. I mean, it's just pretty bizarre. One thing I will say is, though, I was pretty scared that the guy one of his comments, the new guy's comments, was that he thought he just postponed putting out those numbers, and which of course I think the bond market and everybody said, no, I don't think you're going to do that. We've been doing it since 1905. I suppose you're going to keep going. And they did put them out the first of this month, but it was terrible as expected. I mean, the economy, there's unemployment. Unemployment's right, left, and center, and inflation's higher than it's been since, I don't know, 2013 or some shit. What do they want? Yeah, tourism is way down in the States, and both from Europe and everywhere else in the world, also from Canada, which was a real big one, I mean, a lot of cross-border stuff both ways there, but yeah. It's a bad scene all the way around. It's like pretty crazy, pretty darn crazy. And we had one more VPOC migration, so if you're just dying to have one more trade before the end of the day, there you go. So I'm happy I got that back testing thing figured out, and that'll be good, and I'll be working on that tonight. You can bet on that right now. Here we are, euphoria at its finest. Absolutely no question about what this market's doing. And we're going to roll into that number and roll at the top there. Cash close at 1,500, which is about 2 minutes now. being paid by the boss. Okay, 1 minute till. Man, she's cooking something out there. It's driving me crazy. My mouth's watering. I can't talk. And look at the liquidity come jamming in there. Jammity, jammity, jammity. Hope you like jamming too, right? It's like reggae. A lot of big numbers parked out here. No real astronomical numbers though this time, like there's been before last week. There was a one earlier on. There was like a 1,200 or something sitting out here at a level 683 or something like that. Yeah, so have a real good evening. Remember, oh, here we go, seconds now. Remember that your health, your brain condition is as, if not way more important than the screens and the charting and all that crap we pay so much attention to. So do something for yourself. Get your eyes, away from the screens. Do something for your health. Make sure you get a good night's sleep. You're well hydrated. You're not on tilt, And that's real important in the market and with your psychology and your attitude. And there we go. Beep goes the buzzer. I think I got a buzzer here or something. Now, one of those is a buzzer and one of them is clapping. I never remember which. There's buttons on my mixer over there. All right. Have a great night. I'm going to see what the boss is up calling me about, and I will be back at 0800 in the morning with bells on for the stream. We'll do the setup, do the pre-market, numbers, reports, all that stuff. The statistics and basically everything, how I configure bookmap, etc. So have yourself a great evening. And like I said, get outside and do something for yourself, for your health. Go to the gym. Face your